Hello and welcome back. Hope you're good, doing well, and having a good week. So let's just start for the weekly market outlook for this week, from week starting from 9 May to 13th of May. All right, so let's look at the website first. If anyone want to join us looking for membership or looking for training, just simply go to wave-trader.com, and if you're looking for further information, fill the form over there. Send that form to me for further information. I'll try my best get back to you as soon as possible. All right, so now let's look at the setups for this week. All right, so first of all, before looking at the setups, let's just talk about some fundamentals, what's happening in the market. All right, before you guys start looking for the setup. Okay, so we all know that we are having a high inflation in the market. All right, everywhere in the world inflation is surprising. Central banks were not expecting inflation to go that much far away. They were expecting that inflation is going to be the transitory, all right, and not gonna stick to there for longer term and gonna fall. Okay, but now central banks are realizing that inflation is going to stick to there for a while, and they have to raise rates to bring down the inflation, and that's what they are doing right now. Okay, so, and even they know that the growth is slowing down, all right, and stagflation risk is just mounting, and they are raising interest rate while having slower growth. Okay, so they are raising rates in a weaker economy. Okay, so they were behind the curve. No, they are trying to catch the curve, or trying to get ahead of the curve, and after once they're gonna catch the curve or gonna ahead of the curve, we're gonna see significant slowdown, or we may see recession. All right, so recession, Europe is already in recession, and the first quarter GDP in the US went negative. All right, and if the second one goes to negative, then US officially gonna be into the recession too. All right, and yes, we can see that Chinese has shut down their country. All right, lockdown is also slowing down their economy, and that's causing the Chinese yuan to fall significantly. All right, and that's what I was talking about, that when Chinese yuan against the dollar was sitting at the bottom. All right, so if I'm gonna look at that chart quickly, and then we're gonna look at the others. So dollar Chinese yuan should be there, so it's just spiking up, and that's what we were talking about when it was sitting up. That's what we were talking about in the previous weekly market outlooks, right? When it was sitting over there, we were expecting all these slow corrective move to the downside to break up aggressively, sharply, and this move to repeat over there. All right, so now this is repeating. Okay, so this is simply a sign that the global growth is slowing down significantly, and maybe we are already in recession. All right, but that's not officially announced yet. All right, so it will be officially announced once central bank's gonna get ahead of the curve. All right, or we're gonna have consecutive negative GDPs in either country first. All right, so now let's look at the dollar, and then we're gonna talk about what we may expect next. All right, so before looking at the dollar, we need to look at the two charts. Okay, so the two charts, one gonna be the inflation, and the other one gonna be the yield. Okay, so if I'm gonna go back to this chart, this is the inflation, US inflation. And if I'm going to look at the US 10-year yield. All right, so US 10-year yield, this is not a correct, data. So the correct yield is somewhere close to 320 right now. All right, so 320, we can say 320. So US 10-year yield is close to there. Okay, and if we're gonna look at the Fed fund rates, all right, so Fed fund rate is close to 1% right now. So they have raised recently with 50 basis point, and the Fed fund rate is at 1%, and highly likely Fed gonna raise with another 50 basis point in the next meeting. All right, so if we're gonna look at that, so we can see that Fed is still behind the curve, right? So they are lagging. So two-year yield is close to 270 or 275 right now. Okay, so they are very well behind what market is expecting right now. Okay, and inflation is somewhere close to 9% right now. Okay, so either highly likely we're gonna see inflation gonna crash to the downside. Okay, significantly inflation gonna crash because Fed is pushing rate higher and financial conditions are tightening. We're gonna see significant sharp drop on the inflation very soon. All right, and that's what central banks are expecting right now. Okay, so if we don't see drop in the inflation, all right, then highly likely we're going to see that the rates, okay, rates going to keep pushing more higher in the US and across the world. Okay, so rates going to keep pushing more higher, and those rates going to force Fed to keep raising the interest rate for more upside to bring down the inflation. All right, so this is what we need to understand. That okay, what's happening right now? Inflation is rising close to 9%. So rates are rising right now across the world, okay, which is causing the dollar to gain. All right, so dollar is just rising because of the higher rates. Okay, so higher rates are coming into the US. That's causing the dollar to keep rising. So the only currency right now is moving is the dollar. All right, so dollar is the currency which is moving, and the rest of the world is just struggling against the dollar. Commodities rising. Commodities almost have commodities have made their move. All right, okay, now dollar is gaining. So what's going to happen? We're going to see crash on commodities, similar like we have seen in 2008. All right, and that crash gonna bring down the inflation. All right, so make sure you keep that thing in mind. Okay, so if we see that the rates keeps pushing more higher, yields keeps pushing more higher, all right, then we still can see more strength on the dollar. Okay, dollar can get more stronger. So keep that image in your mind when you are looking to trade on the dollar or trying to short the dollar. All right, so dollar is currently not a currency to sell right now. Okay, so if I'm gonna bring the dollar index DXY chart right now, okay, so it's extremely strong. We can see over there, and there is potential for the dollar to break the previous top. Okay, and we may see parity on euro. Okay, euro can tag $1 because there we can see, right? So dollar index is rising and trying to break through the previous top. All right, so hopefully now that makes sense. The chart which I have just shown you at the start, inflation is close to 9%, rates are rising. All right, and those higher rates are causing the dollar to stay strong. All right, and Fed is having benefit of that stronger dollar. All right, so the stronger the dollar, all right, so the less inflationary pressure gonna be felt in the US. So it's gonna, stronger dollar is good for the US. All right, so inflation, so stronger dollar gonna offset the inflationary pressure in the US. Okay, it's gonna felt across the world. All right, but it's gonna offset the inflationary pressure in the US. All right, so we may see more strength on the dollar, okay? If inflation does not fall aggressively, we may see more strength, okay? And dollar index can break that previous top and can push more higher. So if you are trying to sell the dollar, it's not the right time to sell the dollar until we see significant drop on the inflation, or we see significant drop on the yields, okay? Yields are trying to find their top, but top is not there yet on the yields because people are waiting for the yields to find top so that they can buy bonds, all right? They can buy bonds and they can, start, buying the equities, all right? They can start buying the stock. So yields are still pushing more higher, and they have got the room because inflation is 9%, rates are 3%. So a lot of, room is there on the inflation, on the yields to push more higher, which can still cause a lot of strength to the dollar to keep pushing more higher. Okay, so keep that thing in mind. So if you are looking to trade on the dollar, whatever you are trying to do, you can stick to the short-term bullish trend on the dollar for 15 to 30 minute or 1 hour time frame trades, all right? And if you are looking to buy the dollar for longer term, dollar is not at a best place where you can buy the dollar for longer term because it's hitting the multi-years tops, all right? And you shouldn't buy a dollar over there at the multi-years tops. You can only buy for short term for a couple of pips, all right? And can wait for the yields to find their top. Once yields gonna find their top, all right, so we may see significant drop on the dollar, okay? But that's not there yet. So we need a change in policy from the Fed for the dollar to drop, all right? So that change in policy is not there yet. Okay, market is expecting a dollar to stay strong. Yes, what you should expect, okay? So the daily correction, we may see another daily correction on the dollar, okay? So if I'm gonna look at this chart, this previous chart, okay, we had that daily correction, and that daily correction was just keep pushing more higher. So we may see similar kind of daily correction on the dollar, okay, like that. That daily correction is due for the dollar index to form, okay? Maybe that can start to appear over there after the next, Fed rate decision, okay? Next meeting, which is due in the June. So after that, we may have a significant, pullback on the dollar, okay? Because Fed is front loaded. They are raising interest rate, significantly with 0.50 basis point. We may see another, 0.50 basis point hike next month, all right? And after that, they may slow down, okay? They may say that we are, waiting and watching for the data, how data is going to evolve, and, gonna, act accordingly. So they may slow down after, June or July meetings, okay? We may not see, 50 basis point hikes after that. They may slow down, and that can cause the dollar to go for a daily correction or maybe a bigger correction, all right? So if I'm gonna look at the lower time frame, you can stick to the short-term bullish, moves only, like these 4 hour time frame corrections to pull back. So I mean, there was a trade, okay? There was a trade on the dollar when we were having a Bank of England rate decision, but those short-term trades have already gone. Okay, so I have just let me look at this example. Okay, that's the example. So there was a short-term sell opportunity on the Australian dollar against the dollar. Now that short-term opportunity is significantly going down on the Australian dollar. Okay, this opportunity was almost everywhere on dollar pair. So this opportunity is just simply gone over there. It's extending over there. We have seen significant drop on the pound against the dollar on the other day when we were having rate decision on the Bank of England. So a pound went lower against the dollar. All right, and the pound is just simply heading for the 120 mark. All right, and this was a sign that the dollar is going to gain across the market. Okay, and we had a short opportunity on the Australian dollar, and we had a short opportunity on the New Zealand dollar. Okay, so this was the opportunity on the other day. So similar opportunity was there on the New Zealand dollar. So you are looking similar kind of opportunity on the dollar, all right? So similar kind of opportunity. So if it pulls back, then short-term continuation for more upside like that to hold it and continue to keep pushing more higher like that, all right? So short opportunity is also possible from that topic. This opportunity, because it is in a sideways market, we can see this one more drop back to this area. So if you are good at that, you can trade into that direction too. You can counter that, okay, but make sure you counter that with cautions, all right, because yield is still pushing more higher. We can see over there, all right. So US 10-year yield is still pushing more higher. It means that dollar still can break the previous top and continue to keep pushing more higher, all right. So pullback. So whatever you are doing, okay. So if you're looking for a pullback trade, you have to wait. If you're looking for a counter trend trade, then you have to be a bit cautious that the yields are still pushing more higher. Okay, hope that makes sense, the analysis which I have made over there. All right, so longer term setup is not there on the dollar yet. All right, so hopefully you are waiting for the fundamentals to go into that direction for the dollar drop. Okay, so euro is still going down, okay, and there is a high probability risk that the euro can break down that previous low. Okay, it can go below that previous low, right? So we may see break down of that previous low. Okay, so drop on euro at this level is clearly sending us a signal that we are heading simply for, we are already having recession in the Europe. Okay, so this much drop on the euro is a clear sign that recession is there in the Europe. Okay, so last time when we have seen drop on the euro, all right, we have seen COVID-19 at this area. Okay, 2020 March 2020 COVID-19, and then we have seen significant recovery over there. So we have seen drop on the euro back there. Okay, there was crisis in the Europe as well at that time. All right, and this is when Fed started to normalize their policy back in 2015, 2014. All right, they said that they're gonna raise the interest rate and gonna wind up their balance sheet. Okay, they failed to wind up their balance sheet. All right, they have simply grown their balance sheet since then. Okay, and their balance sheet is sitting somewhere close to 9 trillion this time, and at that time I think their balance sheet was close to 4 trillion. All right, 4 trillion. And right now they're saying that they gonna start winding up their balance sheet from next month. All right, 90 billion per month reduction, all right, runoff in the balance sheet. And I doubt that they're gonna be successful again. All right, they failed to reduce their balance sheet back in 2015, and they have grown that. They have supported to the market with QE, and that brought their balance sheet to 9 trillion. And I doubt that they're gonna be successful again. All right, so they can drop their balance sheet with 2 or 3 trillion, maybe 7 trillion or 6 trillion, but again they have to go for another QE to support the market. All right, so they won't be able to. Okay, just look at that, the yield. All right, so yield is sitting at 3% right now. Okay, and Fed haven't started to sell their treasuries yet. Okay, so they're gonna start from next month. So if they're gonna start selling their treasuries, their mortgage-backed securities, okay, they're gonna flood the market with that. Okay, that can yields to push more higher. Okay, yields can go out of control. Okay, that's going to put more pressure on the Fed to tighten their policy, to raise rates. Okay, if they're going to raise rates, housing market going to collapse. All right, housing market going to collapse. All right, if housing market going to collapse, there's going to be unemployment and a lot of problems going to be over there for the Fed. So Fed is not going to take that risk. They are not going to take that risk, because if they're going to take that risk, then they will have to their work gonna be much more worse. All right, their work gonna be much more worse to recover the fallout of that mistake. All right, so they are not going, in my opinion, they won't be successful again to bring down their balance sheet. All right, because the side effect of that gonna be huge. All right, and we may, go into a longer term depression, which can be worse than 2008. So fallout of that going to be much more worse. So they are not, going to they are, right now they are doing some kind of policy mistake, all right? And Bank of England, has already accepted that in last week rate decision, all right? But even ECB has accepted, but Fed is not accepting that, all right? So we are already in crisis, okay? This might be a food crisis, all right? So strength on the dollar, this might be a food crisis or energy crisis, we can say that, all right? So we are not going to know that now. We're going to know that later on, all right? Once, that, move gonna finished. When central bank gonna accept that, then we can officially say that, oh, that was the reason and these were the crisis. So this might be a, COVID-19 here, all right? And this might be a food and energy crisis, all right? So which caused the inflation to go higher. So we are already, having crisis and recession in the Europe. Okay, so how to trade? The question is how to trade. Okay, so trade is very much similar like that. You still can trade short term to the downside, like I have, shown you the DXY chart or the Australian dollar US dollar or New Zealand dollar US dollar chart. Okay, so short term still stronger on the dollar. Okay, but longer term looking for the euro to find its bottom and dollar to lose its value. Go for a daily correction. Okay, so we may see daily correction over there on the euro dollar. Okay, so last time and we were expecting it to drop from there, so we are still having that drop. Okay, so still going into that drop, and as said, euro can go beyond the parity. So parity is sitting at the $1. Okay, so parity is sitting at the $1. So possibility exists over there that the euro dollar can break down below $1, all right? But as we can see that ECB is giving signal that they're going to wind up their, QE program maybe next month, and even they can raise the interest rate next month, right? In June or maybe July. So if ECB is going to raise the interest rate in next month or maybe in July, this is going to be a, this is going to be a shock for the market, all right? So right now, ECB is having negative, a zero interest rate and negative, deposit rate. So if they brought that to zero and raise the interest rate, this is going to be a shock for the market. So we may see strength on the euro, okay? Euro can rise very, very aggressively, all right? What ECB is doing right now, they are not, doing anything. They are just waiting for the Fed to do work for them, okay? Fed to bring down the inflation rather than, ECB, go ahead, the Fed and start, tightening their policy. So they are waiting for the Fed to do work for them, all right? So if they are going to raise the interest rate, going to wind up the QE program, we may see strength. We may see significant strength on the euro against the dollar, okay? Then dollar can fall very, very aggressively. So it's very important to watch the ECB, what they are doing right now, okay? And if they are going to change their policy, we may see bounce off on the euro, and euro can do something like that, okay? Like the way it has done back in 2016 when we had French election. All right, so French election was there, so we may see that kind of strength. So fundamentals are really important from the ECB side, what they are doing, okay? But if you are selling euro at current price for more downside, make sure you are selling it only for short term, okay? Not selling it for longer term, because the longer term way, which I have just shown you from the top, from 125, that is almost done. It has done its damages, all right? So you only can trade for short term, for sideways market, for a couple of pips, and can keep taking your profit off, all right? So as said, US 10-year yield is still pushing more higher, okay? So which means that euro can break down that floor, all right? So if I'm going to go back to this, okay, so it's pushing more higher, we may see breakout of this previous floor, okay? It can break down and can drag more lower. So what you are looking for, simply as said, okay, it price to hold these moving averages, go back up, hold these moving averages, and short-term continuation trade. Make sure you use your stop loss really well over there. Okay, do not sell at such levels without stop loss. Okay, we may see significant reversal over there at some point, so it's not a good idea to sell it without stop loss over there. So okay, so like that kind of trade. So buy is also possible from the current price. Okay, after hitting this previous low for short term, for one more up move back within those areas like that. Okay, but as I said, it can break down like we have seen breakout there. Okay, so there we see. Okay, so it's broke out. If we have similar kind of trade there, so you're gonna get stopped out over there. All right, so it's broken down. So euro can also break down that floor, and you're going to buy. All right, so that's the euro dollar. So still can drag more lower euro dollar. Okay, for short term to the downside. Okay, back to 103, or in worst case scenario, parity 1. So if I'm gonna look at the pound dollar, all right, so pound dollar is dragging more lower, and it got a room to keep dragging more lower. All right, so it's dragging more lower. Okay, so it can continue to keep dragging more lower up to 120. All right, so 120. So the important thing, or important point you guys need to consider here on the pound dollar and the pound yen. So if I'm gonna pull out pound yen, all right, so there we can see this is a policy divergence, okay, between the Bank of Japan and yes, we can say that policy divergence is just happening between these three banks. All right, so Fed, Bank of England, and Bank of Japan. All right, so yen. Okay, so these three banks, two banks are going into the same direction. Fed and Bank of England both are raising interest rates. Okay, but Bank of Japan is going into the other direction. All right, Bank of Japan is still holding the ultra loose monetary policy. All right, so yield is rising in Japan. Yield is rising, okay, but what Bank of Japan is doing right now, they are holding the yield below 0.25 basis point on 10-year. Okay, they are trying to hold that below that area. All right, so yield curve control means that they're printing more money, buying government bonds, and putting pressure on the yield. All right, so why they are doing that? Why Bank of Japan is having yield curve control while other central banks are fighting with the inflation? All right, the reason is that, in my opinion, the reason is that inflation is still significantly low in Japan. All right, so they said that their target gonna be at 2%. They're gonna meet their target before the end of this 2020. All right, but I think their inflation is close to 1.50. I don't know the exact numbers. Okay, but 1.50 or maybe closer to that. All right, while in other countries inflation is very well above the central bank's target. All right, some countries are fighting with 9%, 7%, or 6%, 4% inflation. All right, and in Japan, inflation is still significantly below 2% target of Bank of Japan. Okay, why they are doing yield curve control while the other countries are containing the inflation? All right, because Bank of Japan knows that if they're gonna fail to create inflation this time, then the deflationary pressure in Japan gonna be significant. All right, so this is the time to create inflation while the other central banks are containing the inflation. All right, so when world is trying to contain the inflation, at the same time Japan is trying to create the inflation because they have failed to create the inflation. All right, So what's going to happen when the rest of the world gonna contain the inflation? When inflation gonna come down in the rest of the world, we're gonna have more deflationary pressure on Japan. All right. So Bank of Japan may fail to achieve their 2% target. Okay. When yes, central banks are trying to bring down the commodities prices. All right. Washington is trying to bring down the oil prices, gas prices. All right. Releasing reserves to bring down the oil prices and commodities. All right, putting pressures on Saudis to pump more oil. All right, so all these are tactics, are still not playing out really well. Okay, but they are trying to bring down the commodities prices. Okay, so what's going to happen when those commodities prices are going to come down? Okay, there are going to be a deflationary pressure on Japan. All right, so that's the reason Bank of Japan is going against the rest of the world. Okay, because they know that the deflationary pressure, once prices is going to start to fall, commodities is going to start to fall, they're going to face again deflationary pressure. Okay, so they are trying to avoid themselves from that kind of scenario. All right, so that has happened back in, if you're going to look at, divergence. Okay, so we have seen divergence there within these areas back in 2011 to 2015. We have seen divergence, significant divergence over there. Okay, so we are having we had that divergence here too. Okay, so when we had within these dates. Okay, so if I'm gonna pull out these two. Okay, so we have seen significant drop on the pound against the dollar, but pound was still gaining against the yen. All right, so that was the policy divergence. All right, and what happened then? Okay, what happened then? All right, then we have seen significant drop on the pound against the yen. All right, and then yen started to catch the rest of the market. And that's what we are going to see again. Okay, what's happening right now? Yields are pushing more higher. Okay, because inflation is rising. Okay, so once we're gonna see top on inflation, when inflation gonna start falling, all right, and yields gonna find their top. Okay, we're gonna see significant strength on the safe havens. All right, specifically we're gonna see buying on bonds. Okay, when bonds gonna start, bond prices gonna start rising, yields gonna start getting down. Okay, yields gonna come down then when we're gonna have sharp drop on commodities. All right, and that's what central banks are trying to do. Okay, then we're gonna see a significant drop over there. Okay, so we are having divergence again there, policy divergence. Okay, everything was all right. All banks are, everyone was having, ultra loose monetary policy there. Okay, Bank of England was having, ultra loose monetary policy, 0.10 basis point interest rate. Okay, everything was moving in line. Okay, then what happened? We have seen policy change there within these areas. So we have seen oil crash and policy change. All right, so banks are going in a different direction. Okay, so what's going to happen? Once inflation going to start falling, we're going to have significant drop over there, like we have seen over there within this part of the chart. Okay, within these areas. So this is, setting up for a longer term. So we're going to have longer term trend direction. Once, inflation going to find its top, we're going to have, we will see, longer term drop on, we're going to see longer term strength on the yen, and we're going to see, longer term buying on bonds. All right, so bond going to start gaining for longer term. So inflation needs, what we need to see, where we need to see drop. Okay, we need to see drop in commodities. Once commodities going to start falling, we're going to see significant drop in the inflation. Okay, commodities need to fall. This is the commodity index. All right, once we're going to see significant drop there in commodities, there, like that. Okay, so very much similar like 2000. This is what central banks are trying to do, and governments are trying to do. They're trying to create that crash by raising the interest rate, by tightening the financial conditions. Okay, we have seen that crash back in 2014 and 15 as well. All right, so this is what they are trying to do right now, crash. So this crash is coming over there, guys. So that crash is going to bring down the commodities. So we need to see crash over there. All right, so it's some relief is over there. I have posted that chart over the weekend. Okay, so this is dropping from that top. So we're gonna see crash, and that crash is going to bring down the inflation, and eventually we're gonna see strength on bonds and yen. Okay, and what's gonna happen with that divergence, the divergence which I have just shown you here, that divergence gonna be eliminated. Okay, this divergence is going to be eliminated. So let's just look at the example, another example. So if you guys remember the chart, this chart. Okay, so what we were having over there, we were having lag. So we call that lag. Okay, so lag or divergence, whatever you want to call that. Let's just bring that chart. Okay, so dollar chief is rising. Dollar is rising against the chief right now. We can see over there, all right? And what was happening just a couple of weeks or months ago, both pairs, euro dollar, if you remember this, I have made that comparison as well on the other day. Okay, when I was talking about that euro was falling significantly while the dollar chief wasn't falling. Okay, so dollar chief was sitting over there, and we were talking about that the breakout. Dollar chief is setting up for a breakout for upside. Now we are having that breakout. Okay, now dollar chief is just trying to catch up to the euro dollar. All right, dollar is gaining across the market. All right, so that's what we're gonna see on the pound yen and pound dollar chart. All right, so divergence or policy divergence causing the spread to get widened. All right, once that policy divergence gonna be over, or once central banks gonna stop tightening their policy, then we're gonna see that this divergence gonna be over. Okay, so the divergence which we are having, so we're gonna see that significant drop over there. So for example, or for better understanding, okay, I can use another chart too. All right, so if I'm gonna pull out euro yen, okay, so there we have seen that policy divergence as well back in 2014. Okay, there and there. So what was happening over there? Dollar was gaining, all right? Because Fed said that they are going to wind up their QE and going to cut their balance sheet. Okay, they raised the interest rate in 2016, all right? So after a long time, okay, so they raised 2015 or 2016, and then they started to raise the interest rate back in 2018. Okay, so somewhere there. But they started to give signal that they are going to wind up their QE program. So we have seen a significant strength on the dollar at that time. Okay, but what happened? So we have seen a policy change. Bank of Japan was doing similar kind of things at that time, holding the ultra loose monetary policy, trying to create the inflation, but they failed. Okay, and then we have seen a significant drop on the euro against the yen. Okay, and then yen caught that move. Right, because both currencies are safe haven. Dollar is a safe haven and yen is also a safe haven. Okay, so what's happening right now? So divergence, significant divergence, policy divergence. Okay, so a huge euro, where divergence came there when Bank of Japan announced ultra loose monetary policy and yield curve control, and at the same time we had a oil shock. Okay, euro went higher. Before that, everything was in line. So euro dollar went lower, euro went higher against the yen, and that caused the divergence. Okay, now this divergence is going to wiped out over time, and we are expecting that the yen gonna get stronger, and we're gonna have a significant sharp sell-off. The sell-off which we have seen back in 2014, all right, aggressive sell similar like that. All right, so hopefully that makes sense, guys, for you. Okay, so what to expect from pound dollar and from pound yen or other yen pairs. Okay, so should you start looking for buy the pound against the dollar? No, it's not a best time to start looking for the buy on the pound against the dollar. Okay, because trend is still bearish. All right, and even Bank of England said that they are, they are expecting recession at the end of this year. Okay, so what happened last time? COVID-19. Okay, what happened before that? In 2016, Brexit. Okay, what Bank of England is saying that another recession is coming at the end of this year, 2020. Okay, so they are raising rates in weaker economy. Okay, so higher rates are not going to push the pound into that direction. All right, so what you should expect, just keep trending slowly to the downside and tag these areas, or maybe go all the way up to 115. 115 is far away, okay, but possible. All right, so if I'm gonna look at the lower time frame, I'm gonna pull out my moving averages. All right, so you are looking simply another pullback and pound to stay short-term bearish. All right, so another pullback, possible another pullback, and this to break below 120. All right, or expanding triangle formation. All right, so if you're buying, then make sure you are buying really careful. Okay, so pull slightly more upside and then keep dragging lower all the way up to 120. Okay, so it can continue to keep falling up to 120, so it's not at the best place where you can start buying it. All right, okay, this is what you are looking. So if I'm gonna, so hopefully you understand the fundamentals, guys. Okay, the analysis which I have made over there on the fundamental side. All right, because those fundamentals are going to play out for longer term over there, so they are not going to change anytime soon. All right, so we had a Dollar-CAD chart. So Dollar-CAD is also pushing more higher, so we may see significant strength on the dollar, okay, against the CAD. So if I'm gonna look at this chart, all right, and it got a lot of room to run. Okay, we may see significant strength on the dollar against the CAD. So the average price I'm expecting on the Dollar-CAD is 136 to 138. Okay, so we may see price over there on Dollar-CAD within these areas. Okay, the Dollar-CAD can reach to those areas. Okay, so if I'm gonna look at what's causing dollar to not rise against the CAD is the oil. Okay, so oil is causing the dollar to not rise. Okay, oil is stronger. Because of that, the CAD is stronger too. Okay, so what I have shown you at the start, crash on the commodities index. Okay, so crash on commodities index will also gonna bring down the oil and weaknesses on the CAD. Okay, which can cause Dollar-CAD to continue to keep pushing more higher. So if I'm gonna pull out this chart and gonna look at the DXY chart, okay, so we may see significant strength on the dollar. Okay, so what's happening right now? We have already if you Google that, you're gonna get the information what has happened over there within these areas. Okay, again, tightening monetary policy was happening over there within these areas from the from the Fed side. Okay, DXY aggressively went higher while the Dollar-CAD was struggling over there. Okay, and then it caught up and went higher, and then we have seen drop over there from the DXY or Euro-CAD strength, okay, and then we have seen a significant drop. So similar thing is just happening over there right now. Okay, we are having strength on the DXY, all right, and dollar in the Dollar-CAD is still sitting over there back at the bottom. Okay, so the average price should be somewhere there. Okay, so somewhere there within these areas. So the average price Dollar-CAD to tag is 136 to 137 within these areas. Okay, so similar price it should hit. So if I'm gonna all right, so that's the price you are watching, that's the target you are watching on the Dollar-CAD. Okay, so Dollar-CAD can continue to keep rising for more upside. Okay, so I'm gonna look at the S&P 500 on those charts. So let's just look at the opportunities. Okay, so there you see still more upside, more potential on the Dollar-CAD, so you can catch that trade. Okay, so how you gonna catch that trade? So the trade is almost already happened. Okay, so you know there was opportunity to buy the Dollar-CAD at these areas for longer term for more upside. All right, and if you caught that, great, you did well. And there was a risk for this to break down at that time for more downside, and the next short-term opportunity, you know, created over there back last week. All right, so there was the opportunity. I was expecting it to continue to rise there from that place, so it's just rising. So Dollar-CAD can continue to keep pushing more higher. Okay, so let me find a chart if I'll get that chart and what to expect next on the Dollar-CAD. So you're simply looking Dollar-CAD to break out, okay, break the top and continue to keep pushing more higher. So you don't have a sell opportunity over there right now on the Dollar-CAD. Okay, so Dollar-CAD is just pushing more higher. We were expecting this to hold. Okay, so same, it was the same trade like I have shown you on the Australian dollar, US dollar, or New Zealand dollar, US dollar. Okay, after the Bank of England rate decision. So dollar was just simply gaining. So now it's trying to break out, you know, above that top. For short term, all right, so I don't see any opportunity right now at the current price for buying the Dollar-CAD for more upside, all right? So you have to wait for this to fall back again within these areas and hold that and continue to keep pushing more higher, or a bigger daily correction, okay, like my structure is showing right now. All right, so as I have shown on the bigger time frame, you still got a room for this to run for more upside, all right? And the reason why this pair is staying sideways again is oil, and we are having higher yields on both currencies. Yields is neck on neck on both currencies, which is causing this to not run trending because policy divergence is not there between these two banks, Fed and Bank of Canada. So that's causing the currency to move slow, all right? But the slower the currency gonna move, okay, and the wider the gap gonna be between the other, you know, currencies or other banks, the stronger the crash gonna be over there for more upside, okay? Like we have seen back in, you know, 2020 COVID-19 crash here within these areas, okay? So the stronger the crash gonna be for more upside because the recession risk is just looming over there. So daily pullback is still possible, okay? This is gonna be a decent trade, all right? But giving the current fundamental, you know, is not supporting that move, okay? So the current fundamental is supporting the breakout and continuation for more upside up to, you know, as said, 136, 137. But you shouldn't chase it at the current price, okay, for buy for more upside, as there is no a good setup over there, okay? If let's see if oil crash significantly from current price, okay, we are expecting oil to crash at any time. Oil can go below 90. If you look at the Ukraine and Russian, you know, problem, you shouldn't expect oil to drop, okay? But when you look at the financial conditions, what central banks are trying to do, they're trying to slow down the demand. China closed down, all right? And Saudis are, you know, bringing down their price for Asian countries, okay? All these things are telling us that the demand is, you know, we are having a demand shock, all right, and which can, you know, crash the oil prices significantly to the downside. So if crash comes on oil, oil goes below 90, okay, then we may see more upside on the dollar CAD. So I shouldn't, you know, you shouldn't chase this at the current price, as said, okay. At least price need to fall back within the moving averages before you, 4-hour moving averages, before you start looking for this to continue to keep pushing more higher. A kind of neutral analysis. Either you can counter it from the current price for more downside, all right, or you can simply ignore it. Okay, so not at a best spot where you can chase it. Okay, so dollar chief. Okay, so dollar chief still can rise for more upside. All right, so if you're gonna look at the dollar yen chart with okay, so dollar yen is significantly strong right now, okay, and broke out this previous high. Okay, this previous high dollar yen. So there is still a risk for the dollar chief to continue to keep pushing more higher. What's the logic behind the dollar to continue to keep pushing more higher against the chief? Okay, because both countries, Japan and Switzerland, both are having deflationary pressure, okay, and their currencies were stronger during the COVID crash, all right, and yen significantly lost its value against the dollar, okay, because of the yield curve control. We are not having that kind of scenario from the Swiss bank of, you know, Swiss side, all right, but dollar is just gaining over there. So dollar is still behind, still lagging, you know, on dollar chief against you know, like dollar yen has done over there. So it still can keep climbing more upside. It can break above these tops. Dollar chief can break above these tops, or in other words, dollar chief still can climb up to 103, 104 areas, and above 103, 104 areas we may see longer term sell opportunities on the dollar chief. Okay, so what is telling us that? Okay, this is telling us that dollar chief still, you know, in a strong bullish trend, okay, and you know, approaching back to these previous, you know, longer term tops. Okay, so what you can do, you can trade short term for more upside, okay, but if you are looking to sell it for longer term to the downside, as said, dollar is still lagging behind the dollar chief, still lagging behind the euro dollar, behind the dollar yen, okay, and it's still got a room to keep pushing more upside rather than falling. Okay, when dollar chief gonna start falling, okay, once, you know, again we're gonna see top on yields, and when central banks gonna calm down, they're gonna see that when they're gonna say that they are not looking to tighten more their policies, okay, then we're gonna have, you know, top on yields, and the currencies which are getting stronger because of higher yields, they're gonna start falling. They're gonna start, you know, having pressure for the downside. Okay, so what to do then? Again, similar like other dollar pairs, continuation trade. Okay, need to see a pullback, and that pullback to fall back within the moving averages and continue to keep pushing more higher. So on this time frame, so pullback is showing somewhere there. Okay, so within these areas, price need to fall back, and then you are looking to continue to keep pushing more higher. Okay, or you can wait for the at least 1 hour time trend to be tested, and then continue to keep pushing more higher like this. All right, so price to fall somewhere there within these areas. Okay, 1 hour like price has already done over there. So simple, you know, a simple, you know, retest of the moving averages, trend to hold, and continue to keep pushing more higher with the previous trend like that. Okay, so price to fall back within the moving averages and continuation trade for more upside. So counter trend trade is not there. Okay, so continue to keep rising. So pull back and then continue pull back like it has done there. Okay, pull back, hold the moving averages, and continue to keep rising. I hope that makes sense, guys. So another dollar chief, another dollar chart. Okay, so dollar yen. Okay, so dollar yen is currently simply not ready to draw for a big time. Okay, so yes, I'm expecting dollar yen to drop for longer term to the downside, and we may see a huge drop on the dollar yen, okay, for longer term. All right, so I'm expecting dollar yen to to even go below these areas for the next cycle. Okay, so we can see dollar yen can go lower than 100, all right, lower up to somewhere close to 80, 85. So okay, so it can go 80 or 85 for the next, for next cycle. Okay, and the reason why we can see drop on the dollar against the yen, because of the policy mistake from the central banks. All right, so if Fed is committing policy mistake, that can drive what is policy mistake. All right, so policy mistake is very much simple, lads. All right, as I said, Fed is looking to last week when people were asking to the Powell that why they haven't started the runoff in the balance sheet this month, why they are waiting for another month, why they are waiting balance sheet runoff to start from 1st June, why not May, why not 1 month earlier when you know that inflation is significantly higher, why not starting this month, why starting next month? So what he said that, all right, so the effects of balance sheet runoff is uncertain. Okay, so they don't know. All right, so Fed doesn't know that how balance sheet runoff can affect the markets. All right, so we can say that, guys, balance sheet is simply a pillar right now for the markets. All right, so if Fed take that pillar away from the markets, all right, so markets gonna crash, very hard. All right, so the whole right now the whole market is standing Fed balance sheet. All right, if Fed take that balance sheet away, all right, rates gonna go higher significantly, may go close to 10%. All right, rates can go close to 10%. This is the worst case scenario. I'm just assuming. All right, I'm not saying that this is possible. Okay, but I'm just assuming. Yeah, may happen. I know that Fed is not going to do that. Okay, because they know the cost to do that. All right, so if they take that balance sheet away, they start selling their, right now Fed is running the US governments. All right, what US government is doing, they are creating bonds. All right, and who's buying those bonds? Fed. All right, rest of the world don't have that much money to buy the US government bonds. All right, so Fed is creating money, buying US government bonds, giving them loan, all right, and holding that treasuries on their balance sheet. The rest of the world is not providing, that to the US governments. All right, so if Fed gonna sell all those treasuries, okay, and gonna take balance sheet support away from the market, so the whole market gonna collapse. So the effect of those balance sheet uncertainties are so huge. Even Fed doesn't know that if they're gonna take that away, all right, where it's gonna be, and if rates start rising above or close to 10%, then this whole stock market gonna crash significantly. They're gonna be housing crisis, labor crisis, and worst case scenario is gonna be everywhere. So that's the reason they are just trying to delay. All right. And balance sheet runoff, they are just trying to delay as much as they can because they know that the risk of that is significant. So what's going to happen? We are going into recession, right? Markets are preparing for the recession, and what Fed gonna do? Fed gonna start another QE very soon. They're gonna start another QE. They're gonna start supporting the market very soon. All right, so then what's going to happen? The balance sheet going to climb more upside. Maybe in next QE cycle, we're going to see, balance sheet close to 15 trillion, all right, 15 trillion or 20 trillion, all right, with the next cycle. So that can cause significant drop on the dollar for longer time, all right? So we may see a huge drop on the dollar for the next cycle, okay? And then dollar yen can even go lower than this previous low. This is a longer term, thought, guys. We may not see that within a 1 week or maybe in a year. Okay, that can take a couple of years to happen. But yes, that's what I'm expecting, a huge longer term drop. So what we have seen, recently we were expecting dollar yen to drop somewhere there, okay? But what has happened? We have seen, two shocks. One is the oil shock and the other one is the bond shock. So, right? So bond market crashed and oil, significantly went higher. Okay, stagflation crash, shock, we can say that. That's caused dollar yen to go higher. All right. So what I'm anticipating right now, I'm anticipating, dollar yen to again fall significantly, aggressively, okay? But when that can happen then when Bank of Japan gonna stop, yield curve control. Okay, when Bank of Japan gonna stop yield curve control, then we may see significant strength on the yen. Then yen can stop playing as a safe haven again. Right now, yen is not playing as a safe haven. Even equities are dropping significantly. We have seen, how much drop on the Nasdaq 100 index, if we're going to look at that. So we have seen almost 26% drop on Nasdaq 100 index. Okay, and at least 20% drop here. 16% drop here on this S&P 500. Okay, and there is a risk that even we have seen drop on the Nikkei index as well. Okay, it's up to 20% and at the current price 15%. All right, and while during that, yen is losing its value. Okay, the reason is very much simple. Why yen is losing value? The first one is the oil shock and the second one is the bond shock. All right, because yields are pushing higher, yields are causing yen to stay weaker for a while. Okay, so once yield gonna find its top, Bank of Japan gonna stop their yield curve control, we're gonna see significant drop on the yen. Okay, then yen can gain and we can see strength on the yen aggressively to the downside. Okay, so till then, either Fed to stop or yields to stop falling. All right, so stay short-term trending as shown on the other dollar pairs. All right, and wait for a significant aggressive sell-off from the top. Once that comes, start looking for it to draw for longer term to the downside. All right, and if it goes up to 30 or form new high, you are simply intervention. Okay, the word I'm using here is the intervention. You are waiting for the intervention from the Bank of Japan. All right, so intervention from Bank of Japan, they can intervene in the market at any time. Okay, their currency is weaker, they can say that they are not happy with the exchange rate and they can intervene. So intervention from them can significantly create shock waves in the market, specifically on the yen. Okay, so that's what you are looking for: intervention and sharp, aggressive, quick drop, and that's going to be the longer term top on the dollar against the yen. Otherwise, trending, pushing back within moving averages, short term still trending for more upside. All right, so that's the dollar yen. And if I'm gonna look at the other dollar pairs, so dollar Australian dollar. All right, so we were expecting here dollar to gain against the Australian dollar. Okay, but it slightly went higher and then crashed. All right, so oil shock, that was the oil shock. All right, we were not expecting that oil shock at that time, but it happened. All right, so oil shock happened. Even no one was expecting that Russia gonna invade in the Ukraine. That was an unexpected move that caused the shock, and then we have seen strength and then weaknesses on the Australian dollar. So what we should expect? Should we expect Australian dollar to gain against the dollar right now? No, you shouldn't expect this to go that much far away anymore. Okay, so what happened? Okay, so many currencies or commodities, they are tagging. Let's look at the copper. Okay, so let's look at the copper. So that's XC, sorry. So that's the gold. XCU. XCUUSD. Copper. So let's look at the copper chart, and we're going to put Australian dollar, US dollar on that copper chart. That's the copper. Okay, so we're going to pull out Australian dollar, US dollar. Come on. Okay, so there we can see clearly. All right, so we have seen peak in 2008 there. Okay, then 2008 recession, a significant crash over there. Okay, and then again ultra loose monetary policy from central banks went higher. Okay, and then central banks started to tighten their policy, their monetary policy. Okay, from that top, from 2011 to 2020. Okay, and we hit the 2020 crash, COVID crash. All right, and then what happened in 2020? Again, ultra loose monetary policy started from there, and commodities started to rise. We have inflationary cycle. That's the inflationary cycle. Okay, and in 2020, dollar should fall. Okay, dollar in when we had ultra loose monetary policy from almost every single banks, Fed was also holding the zero interest rate policy. All right, dollar should have fallen in 2020 because of the ultra loose monetary policy from Fed. Okay, and it should also go into that direction. It should have gone into that direction back in 2020, like other commodities have done. Dollar should have fallen cyclical back in 2020, but that hasn't happened. All right, we haven't seen dropped on the dollar back in 20 or 2021 or 2022. We can say that. All right, what's happening? So dollar gaining. All right, so dollar is dollar is gaining. All right, and these Australian dollar, US dollar, they are going down back to 2020 crash. All right, so that move, the cyclical sell-off on dollar did not come. Okay, so should we expect cyclical sell-off on the dollar after Fed has started its tightening cycle? I don't think so. We should expect significant sell-off on the dollar till Fed actually commit policy mistake. All right, policy mistake. Okay, so if Fed is going to commit policy mistake, they still have they have to go for ultra loose monetary policy. All right, they have to cut interest rate to support the growth. Okay, then we may see drop on the dollar. Okay, but we are far away from that kind of scenario yet. Okay, so till then we should not expect that kind of move on the Australian dollar or US dollar. Yeah, like we have seen, correlation here back in history. All right, so correlation was copper was going higher and Australian dollar was also going higher. Okay, so that correlation has broken out. So what we're going to see, we're going to see significant sell-off on the copper. Okay, that's what they are trying to do right now. So significant sell-off on the copper, and more downside is possible on the Australian dollar. Slow or maybe quick, sharp, aggressive sell-off like COVID-19 or like pound dollar is doing right now. Okay, back some, or euro dollar is doing below parity. That can happen and continue to keep dragging more lower. All right, so there is no reason right now to look for Australian dollar to go that much far away. All right, so hope that makes sense. So what to look for, what to expect from the Australian dollar? Again, recession risk is just mounting. Some banks are expecting that there is a 50% chances for the recession within next 2 years. Okay, even Bank of England. All right, some economists were saying that 50% chances for the recession in 2020. But now Bank of England is the first major bank which came out last week and said that we are going to see recession in 2020, all right, at the end of this year, all right. So some banks are expecting, so we shouldn't expect risk on currencies to stay stronger while having recession on our door, all right. So they're gonna struggle. They're already struggling, and we may see slow move, continuation, slow drop, back, maybe with up to this area, or the price which I'm expecting right now is closer to this. Let's just exactly figure it out up to which level Australian dollar can fall. Okay, so for that we need to just simply pull out our euro dollar chart, because this is what we are not anticipating right now. So if I'm gonna pull out a euro dollar chart, okay, we can get the idea that up to which level this chart can drag. Okay, so just look at that. So it can drag up to, in worst case scenario, it can drag up to this low, okay, where the euro dollar is already sitting over there, all right, these areas. So it can drag all the way up to back to this area where the euro dollar is sitting right now, all right. So that's worst case scenario. I'm not right now anticipating, but that's possible, all right. Recession can significantly push that price to all the way back to these areas. Okay, so just look at that, how bigger lag is there. Okay, so there's a huge lag. So if I'm gonna look at the exact let's just find out up to which price we can expect Australian dollar to fall. Okay, so if I'm gonna look at the date, the euro dollar is just testing right now. So the euro dollar is just simply even gone below this area. All right, this date, it has just gone. So if I'm gonna look at that date, what was the date at that time? The date was the 23rd March 2020. Okay, so let's just look at that. Where was the Australian dollar at that time? Okay, so 23rd of March. Okay, so there it is showing me somewhere there. Okay, there crash. Okay, so this is the price where it is showing. So this exact this at 58. All right, so 58 is far away. I'm assuming that it can visit this price, this area. This is the area where it can visit. So the reasonable price. Okay, I'm anticipating the Australian dollar to visit the reasonable price. Okay, so this is going to be too much, the March 2020. All right, so somewhere there within these areas, this is a reasonable target. Okay, so there is a room for the Australian dollar to drag up to this place, 60, 67, 66 areas. All right, so any pullback, I'm gonna create a room for this pair to just keep dragging more lower. All right, so there is a very strong correlation between the euro dollar and the Australian dollar, US dollar. Okay, so if euro dollar keeps falling, you shouldn't expect the Australian dollar to rise. Okay, you shouldn't expect the Australian. Let me just bring those charts back, the charts which I have just shown you at the start. I think I have already shown. If you guys go back to the, let's just move on. All right, so let's just move on. So there. Okay, so the reasonable price you are looking is this. Okay, so the reasonable price target going to be that 66. So it can continue to keep dragging more lower. So the opportunity is already gone, guys. I have shown at the start, so you shouldn't expect anything on this chart at the current price. If it is going to pull back within the moving averages, then you should expect it to continue to keep dragging lower. So the trade was there. The trade has already happened over there. There was the sell-off opportunity within these areas. Okay, now if it is going to pull back, then you still can expect it to continue to keep dragging more lower. That's the target. All right, And if you already caught the trade and one of them from my member, then you are still expecting it to continue to keep dragging more lower. Okay? That target is reached, that target is reached. Okay, so 66 is on the card. All right, so 66 is on the card. Okay, so more downside. And let's say if it is going to pull back, okay, if it is going to pull back for another time, so this is going to be another opportunity to continue to keep dragging more lower. Hope that makes sense, guys. All right, so New Zealand dollar is also similar like that. I have, you know, same analysis. The reason it is, yeah, just put these two charts on it. Okay, you don't need to, I don't need to talk about a lot. All right, just look at these two charts. Okay, just look at these two charts. What you see over there on these two charts, you see that the Australian dollar is still a stronger currency against the dollar. Okay, there is a room. Okay, there is a room. So this tells us that the Australian dollar is still a strong currency against the dollar. All right, what that mean is, that the Australian dollar still can fall for more downside. Okay, so what New Zealand dollar is telling us, okay, you know, we are having weaknesses on the New Zealand dollar. What these weaknesses are telling us, okay, so weaknesses on the New Zealand dollar is telling New Zealand dollar is a risk on currency, okay, and a smaller economy as with compared to the Australian dollar, or you know, Europe, or you know, smaller than the US, okay, but it's a major economy, it's a major, you know, bank. All right, New Zealand dollar is a major currency, you know, within the major banks. Okay, so weaknesses on the New Zealand dollar is telling us that something is not right. All right, it's a you know, small economy and the risk on currency, so that's falling. All right, that is falling. That's telling us that the risk on assets are not going to do well in coming days or coming days to weeks. Okay, so weaknesses on the New Zealand dollar is telling us that the other risk on currencies may fall too. All right, so if you miss the drop on the New Zealand dollar, you may catch the other risk on currencies. You may trade on the other risk on currency. You can, you know, catch those trades. So that's the reason you are having that lag over there. Okay, that's the reason market is creating that lag over there. Okay, so small currency, small economy as with compared to the Australian dollar, falling, you know, aggressively and sending a signal that things are going to get more worse in coming days on risk on assets. Okay, so that's the reason the target which I'm showing over there is a reasonable. Okay, so New Zealand dollar is almost to reach over there. I have almost reached over there. Okay, so this area, so this place. Okay, almost reached over there. Before that, we were expecting it to drop till October lows there. Okay, there. October lows, somewhere there, October lows. So the prices had gone more lower than that. So you're expecting this Australian dollar to just keep dragging more lower and take out that March lows. Okay, these March lows, right? These areas. Hope that makes sense. So catchable. So New Zealand dollar, if New Zealand dollar is going to pull back, still tradable. Okay, similar like the Australian dollar, US dollar. Okay, so if pullback comes like that, you are still looking at to continue. Chart I have already, you know, shared that at the start. So let's look at the other currencies. Okay, let's look at this inflation and one-on-one chart by one-on-one. So I have, you know, shown the dollar chart. Let's look at the rest of the assets. So dollar is very important because dollar is moving right now. The rest of the market is just following the dollar. So dollar and bonds, they are, you know, telling what's going to come next. So this is the 5-year break-even inflation rate. Okay, so if I'm gonna pull out my fib lines from there to there, so we can see that the 5 years break-even inflation rate has fallen from that top, from 360 to 322. Okay, this is telling us, this is leading us that the inflation is going to calm down. Inflation is going to drop, you know, within next a couple of weeks to months. All right, inflation is easing in coming days. Okay, so we are currently having this move. Okay, so if I'm gonna pull out US 10-year yield is not the, yes, this. All right, so we are having that wave. So US 10-year yield is just rising within this wave right now. Okay, this wave, that wave is just happening right now on the US 10-year yield. So inflation expectations are falling. All right, these inflation expectations are telling us that we are about to see top on yields. Okay, so yields may fall to the downside. All right, like this, you know, 5-year break-even inflation rate has done. Okay, so if I'm, in other words, we may see drop in coming days like that. Okay, like that drop on yields. All right, so we are having some, you know, weaknesses. Some short-term bonds are being bought. Okay, like two-year yield is struggling right now. Okay, so 2-year yield is not pushing more higher. So 2-year yield is trying to find its top over there, somewhere close to this previous top. All right, because Fed is trying to get ahead of the curve. Okay, so this is not rising. So this is telling us that people are building their positions in short-term bonds. Right? Why they're building buying short-term bonds, and the short-term US 2-year yield is struggling to break above like 10 years. All right, because Fed has raised its interest rate with 50 basis point. Okay, they were front-loaded. They are going to be front-loaded again with another 50 basis point next month. Okay, which means that short-term rates are going to peak. All right, Fed may, you know, hold on after raising rates with you know 1 or 2 times with 50 basis points. Okay, they can hold on. They can stop raising the interest rate. So that's the reason the 2-year yield is not jumping or not you know, rising like 10-year yield is doing right now. Okay, there we can see. So we are having almost similar kind of pattern formation. All right, there, and this is not rising for more upside. Okay, we are having similar kind of pattern formation there on you know, 2-year yield, and similar kind of pattern formation on 5-year break-even inflation. Okay, so finding top, we can say that the 2-year yield is finding top over there, like 5-year break-even have done. Okay, so the next move we may see like that over there. Okay, like that. So that's what market is preparing for that. Hope that makes sense. So 5-year break-even inflation is important chart. That's telling us also, if we're gonna pull out that chart and we're gonna look at the oil. Okay, oil is also can drop up to US oil. US oil has, you know, already made that move. Okay, there we can see over there. So now US oil is gone, has gone sideways, very much similar like the inflation break-in inflation has done over there. So we may see drop on the oil like that way we have seen over there on the like this wave. Okay, this is the way which we are anticipating, and possible breakout on oil below this 92 mark. All right, so 92 mark, oil to break below that 92 mark, or if the stronger sell-off is going to come, then go much lower up to 70 or 70 or in longer term 50 areas. So I'm gonna look at the oil chart too. The oil chart is already there. I have posted that. There is the oil chart. Okay, so that's the commodity index chart. All right, before that, which I was showing, this is slightly going lower. Okay, but I think I have mistakenly shown that oil chart previously. Okay, so oil is just dropping from there, from that top. So this move is already there. You're looking for that move. Okay, the move which we have already seen on the inflation 5-year break-even inflation. All right, so you're looking oil to drop. Okay, so oil, it's trying to hold that top. So you look in oil to give you that move. Okay, this move back and break down that 90 to 95 area. So use reasonable risk, okay, proper risk, and watch these areas, and look for, you know, short-term trades first there, and if fall is going to be significant and quick, then the trade you are looking is going to be very much similar like that trade. Okay, back to that previous low, so very much similar like that trade. All right, so this is what you are expecting on oil to fall. And in case if we are again going to see some support from the OPEC countries, okay, then I'm anticipating this kind of crash on oil, guys. And this is if something fundamentally, if something breaks fundamentally, okay, then move can be really quick and like that. Okay, if it is not going to do something like that kind of move, okay, then we can see, you know, this kind of sell-off. As we can see that the growth is slowing down, demand is falling. All right, that can drive the oil aggressively lower. Okay, and everyone is just trying to bring that down. All countries are trying. So commodity index, all you know, leading us. This is telling us the lower it goes, okay, the lower it goes means that oil will also fall. All right, the lower this goes means oil is falling too. Oil is going to drop too. This is index. Okay, so oil will also fall. So Euro Chief is a longer term buy opportunity. Okay, so if you remember that in the previous weekly market outlook, we were talking about the Euro Chief to find its floor over there. Okay, so what we have seen previously, we have seen that chart, if you remember. Okay, in the previous weekly market outlook, I was talking about, you know, this formation. Okay, this was a daily formation. Okay, and we had that first move up at that time after having that crash. Okay, first move, and then it went up to daily correction and then never looked back and went up to 120. So it has done that again. Okay, in the previous weekly market outlook, we were talking about that too, and I said that, guys, the first move appeared over there after hitting the $1 mark. Okay, and let the price to give you a daily correction, and you're gonna be lucky if another daily correction has happened, comes over there. So that daily correction came over there, very much similar like it has done previously. Okay, so previously daily correction came over there, and price never looked back after that. Okay, so hopefully you got it. Why that daily correction came last time? Okay, and why that daily correction is coming again this time? Again, guys, this is being driven by fundamentals. Okay, all right, so central banks are, ECB is turning hawkish. All right, and that was the reason. I'm not sure what was the reason, but this daily correction is telling us that what's happening behind the scene fundamentally. All right, so how you can still catch the Euro Chief for longer term. Okay, now you are looking for this next part of the chart. Okay, this next part of the chart, price can stay there for a while on the Euro Chief for longer term. Okay, so price remained over there almost, 85 days before it took off for the next leg higher. All right, so before it took off next leg higher. So if it comes back within this is your place to watch. Okay, right now it has broken out all those short-term correction on your 4-hour time frame. This correction broke out, that correction broke out. Okay, it's going for the next leg. We were expecting it to either break out and continue or give us another leg lower and support over there, and then continue to give us that short-term leg or longer term leg over there. Okay, and if it doesn't hold, then give us again $1 mark for longer term buy opportunity. Okay, so it's just pushing higher. So what you are expecting, all right, it's still cheap. All right, so 104, 103, 1025, still a cheap price. All right, so if it doesn't come over there, so the price you are watching really closely for, these are the prices for longer term you are watching. Okay, what, that price, this price, or that price. Okay, these three prices for longer term. Okay, so if it doesn't come to those prices again, okay, then simply watching for the moving averages. Okay, so the trend, where the price is going to hold that trend. Okay, so price held that trend there. All right, and slightly went lower than that trend, okay, but was close to this impulse. So if it comes down, okay, then at least hold these moving averages for another correction like that, okay, and stay trending for upside, break out and continue, or hold these areas, 1 or 2 area, or in best case scenario as said. So keep trying every time when it comes closer to 1, okay, put your stop behind 1, and you are looking it to rise for longer term for upside, okay. So the average price you are watching on this chart for short to medium term is the 1010. Okay, so 1010 is the target. 1010, okay, 1010 comes somewhere there. All right, so 1010. So longer term, it can go much higher, all right, but we'll see how it evolves, all right. We'll see how it, continue to keep pushing more higher. Okay, so flag like that. The triangle is not appearing over there, so flag like that. Okay, if another flag comes out, you are paying attention it for longer term like that. Okay, within the moving averages. Hope that makes sense. All right. So Euro Chief is a longer term buy opportunity. So Dollar Chief is going to be a longer term short opportunity. Okay, but it is not ready yet. Okay, so we do have room on the Dollar Chief to slightly push more higher. Okay, up to that previous top. It's not a best opportunity right now to do anything. Okay, so it can slightly push more higher before going to drop. So 79, or in best case scenario 80 for longer term drop to the downside. And if I see that it is going to drop without hitting those 80 areas, okay, because this is a longer term chart, okay, so you can trade on this for longer term to the downside, and it's definitely going to struggle to go to reverse for longer term. All right, so better to stay trending to the downside and let the price reverse as much high as it can. Okay, and it can continue to keep pushing more higher slightly. All right, so it's not ready to short right now. Okay, so if I'm gonna look at this chart, all right, and again, yield curve control from the Bank of Japan. Okay, but as I said, risk of recession is just rising. We may see significant drop like 2008. Okay, because central banks are trying to contain the inflation, and that drop can push price all the way back to this low. Again, if I'm gonna use the comparison which I have made earlier between the pound yen and pound dollar, all right, so same, there's a policy divergence between these two banks, between the New Zealand Bank and Bank of Japan and Fed. So we are having policy divergence. So if I'm gonna pull out the New Zealand dollar, okay, so policy divergence. Okay, so they both were nicely rising because of the ultra loose monetary policy, and then Fed started to tighten. Okay, but we have seen oil shock, and then yield curve control from the Bank of Japan. Okay, now what this is doing right now, this is trying, okay, New Zealand dollar is trying to catch up the sell-off we have seen on the New Zealand dollar, US dollar. So trying to catch up. Okay, so in longer term, what I meant is simply, okay, we don't need to, the way I have shown on the New Zealand dollar, US dollar, and Australian dollar, US dollar, the prices are there right now. Okay, so there, March or February 2020. Okay, so we are having a huge you know, potential on yen pairs. All right, so we are having a huge potential on yen pairs. If I'm gonna, look at this in a different way. Okay, if I'm gonna invert that chart, all right, and I'm gonna pull out another chart on it. Okay, there we can see. So what we have seen here on this chart, on the Euro New Zealand dollar, what happened? Okay, Euro dropped against the New Zealand dollar chart. Okay, significantly dropped. Very, very aggressive sell-off we have seen. Okay, so the sell-off was driven by the oil shock. Okay, war simply in the Europe. All right, so Ukraine-Russian war, gas, natural gas problems, oil supply problems. All right, and everyone was started to run away from the Europe when war started. Okay, what has caused that? That has caused significant sell-off on the euro against the New Zealand. Okay, then it has found its floor over there. So Euro New Zealand dollar found floor or top. We can say that. Okay, so what happened then? Then that shock spread over the rest of the market. Okay, then we have seen, yen started to get weaker. Okay, yen started to get weaker. Yen found its floor over there, almost, significant, similar kind of drop we have seen on the New Zealand dollar against the yen. I mean, a significant drop on the yen against the New Zealand dollar. All right, then both pairs started to find its floor. Now, Euro New Zealand dollar is trying to recover that shock. All right, this previous shock, it has almost recovered that shock with 50%. All right, more than 50%. Okay, more than 50% shock is recovered. Okay, this shock more than 50% recovered, Euro New Zealand dollar. Okay, but these, Kiwi yen still to recover that shock. Okay, more than above 50%. Okay, we may see more upside on, more upside on the Euro New Zealand dollar, more downside on the New Zealand dollar and yen. Okay, if Euro New Zealand dollar keeps pushing more high, I'm anticipating Euro New Zealand dollar to visit that this previous low. Okay, so at least up to 78%, Euro New Zealand to 78%. Okay, 70, or in best case scenario 88%. Okay, if that keeps pushing more higher, then the yen, then the Kiwi against the yen will keep dropping. Okay, we're not going to see more upside on the New Zealand dollar against the yen. Hope that this analysis makes sense for you. All right, and we were expecting a New Zealand dollar to fall against the euro, and that's happening right now. All right, the Euro New Zealand dollar chart, we were expecting it to fall. Okay, this is just almost about to hit our, the target which we were expecting. So this is about to, I do have those charts. We were expecting this to rise from, these areas. Okay, and this is going to be the future move on dollar yen and on other yen pairs. This is the future move you guys are going to see. On yen pairs. Okay, it will take a lot of time to appear over there across the market, but this is what you are going to see in coming weeks to months. All right, so that's happening. This is going higher. Okay, so we are about to see prices just going to hit that. If it goes higher than that, all right, higher than that, then we're going to see New Zealand dollar against the yen will keep falling. Sorry. Okay, let's just bring that chart back now. Okay, and that analysis is going to be all over on my yen pairs. Okay, so if I'm gonna pull out that, pull back that chart, this is the target which is being about to tag by the euro. Okay, euro New Zealand dollar is just about to tag that target. Means that we still can run for more downside on the New Zealand dollar against the yen. Yeah, so how to try? So we were expecting already, as said, we were expecting this to drop. Okay, we were expecting that correction to come out, this correction to come out. We were expecting this, again guys, This chart is very much similar like the inflation. Okay, so if I'm gonna pull out that inflation, look at that. This is just happening, same structure, everything is just same. All right, look at that. Forward, 5-year break-even inflation rate, same wedge. 5-year break-even Kiwi yen, same wedge. All right, so we were having a daily sideways market. Okay, we are having almost daily sideways market. So inflation expectations are falling. Okay, more downside on inflation expectations will also drag the Kiwi against the yen to the downside. All right, so same formation you're having here too. So what you should expect, simply, correction has happened. We were expecting that correction to form and break down. That has happened. All right, now it's going lower. So what you're simply looking for, price to just simply stay below the moving averages and continue to keep dragging more lower. That's it. Okay, if it pulls back for another leg higher, okay, if this comes, then you are looking this to hold those moving averages and continue to keep dragging more lower. Okay, if it doesn't, then sharp breakout. I'm not anticipating sharp breakout from the current price. Okay, as we can see that we are not having deflationary shock at the moment on commodities or any other asset right now. Okay, so that means we may not see stronger sell-off over there on the New Zealand dollar. Means we may not see breakout. Okay, this small breakout for more downside possible. All right, it can happen. All right, but better to wait for the 4-hour moving averages and this to just keep dragging more lower. Okay, that can happen. Okay, but I'm not anticipating. It can break out, can continue to keep dragging more lower, but just keep in your mind one thing: the lower the Kiwi goes against the yen, the other pairs will also gonna follow that. All right, so this is because of the correlation. So correlation will also follow on the other pairs. Okay, so I'm anticipating this to go all the way up to this area, like Euro New Zealand dollar chart. Hope that makes sense. So same goes with this chart. I don't think so. I need to pull out my Australian dollar US dollar chart on the Aussie yen chart. Okay, what's the target on the Australian dollar US dollar? That's the target. That's the date. Okay, huge divergence is there, policy divergence between the central banks. Okay, creating longer term opportunity on the yen pairs. Okay, what to expect? All right, so same analysis like others. Okay, so stay below the moving averages or this flat formation. Okay, so I'm anticipating this to break down. Okay, this move to happen today or in the next couple of days before the end of the week. Okay, so there is opportunity. Okay, because this is still in a lag as with compared to the Kiwi yen, so you may see drop on it. Okay, what Kiwi yen has done, again Kiwi is just leading us, as said before. What's coming into the market? Okay, Kiwi has broken down that daily. Okay, it hasn't broken down that daily floor like the Australian dollar US dollar chart. Okay, so it has broken down that daily, so we may see more downside there. Okay, this tiny small 15-minute trade can happen over there, so possible breakout for more downside. So this is what you are watching. Simply this is to continue to keep dragging more lower, stay below the moving averages and keep falling. Okay, shown that chart, we have seen that chart. All right, so they're similar like the euro dollar and euro yen, so this is also going to be a longer term short opportunity. Okay, so I'm anticipating it to break down sharply from the current price. Okay, but as long as dollar yen is strong, okay, dollar yen is slightly strong, so euro yen may not fall very aggressively to the downside. All right, but if I'm going to make it more simple analysis, all right, on this chart and the daily chart, all right, so you are simply watching price to fall. Do not go above these areas. All right, so looking for this to fall from within these areas. Again, the target going to be that, again, the 70%. Okay, 70% of this mark, like Euro New Zealand dollar, or break out aggressively. All right, break down aggressively. All right, so euro dollar we have already seen. Kiwi CAD is, you know, just keep dragging more lower. We were expecting it to draw more downside. All right, and it has a more room to drop. Okay, so again, and this is another sign that you know, drop on this pair from this previous high to that is another sign that a recession is going to hit the market. Okay, so significant slowdown is going to come. So do we have opportunity? I don't think so. We do have opportunity on it, guys. You know, it's a chart which you can simply ignore right now. Is there a buy opportunity? I don't see buy opportunity. Okay, Kiwi CAD still can keep dragging more lower. All right, so on a bigger time frame chart, right? So still can keep dragging more lower. So there was the opportunity when we had that daily correction. Okay, in the previous weekly market outlooks, we were expecting this to break out and continue to keep dragging more lower. So we are having that way right now. So should we keep chasing it for more downside? I don't think so. Should we look for it to buy? This is not ready. Okay, but we may see, okay, a pullback like that, pullback. Right, it's too early to say that. The trend is still bearish, okay, and the New Zealand dollar is not finding any support, okay, and it can keep dragging more lower. So we'll suggest you to stay away, and Australian dollar to just keep dragging more lower. Okay, so let's just talk about the opportunity. All right, let's just talk about the opportunity. Okay, one pair leads you to the other pair, right? So let's just go there. So I have to remove my drawings to, so let's just go to the blank chart. All right, so there it is. Okay, so there it is. So strongly correlated to each other. And if I'm gonna look at the daily chart, okay, so price almost broken down that previous low, okay, this previous low, and UZCAD is still, you know, haven't tested that. So we can see over there the Kiwi CAD has significantly broken down that low and going lower, and heading towards that you know, recession low. Okay, but UZCAD is still sitting over there at that top. All right, still potential, you know, room over there for short term. All right, so if I'm gonna make it 2 windows, and I'm gonna look at here. All right, so there is the Kiwi CAD, and Kiwi CAD is going down while the UZCAD also going down. All right, but you know, hasn't broken down that previous low. Okay, so what we got a room over there. All right, so it has broken down. All right, so pattern is almost the same. Okay, so pattern tells us that we're the room. Okay, we got that daily correction, okay, and that daily correction broken down and going lower. Okay, so Kiwi CAD is somewhere there, UZCAD is somewhere there at these areas, okay, within this area, okay, there, while the Kiwi CAD has already broken down that low and gone lower than that. Okay, so there is the room. Okay, that's the room, that's the trade. Okay, and possibly it can break down that previous low and can go slightly lower than that. Okay, so there is the trade. So there is the trade. Hopefully you got that. Now let's talk about that trade now. Okay, so now let's talk about that trade. So what you are looking, price already dragged lower, all right, and we need simply a pullback. Okay, we need simply a pullback, very much similar like other pairs where we have seen pull. I have shown you, ask you to look for a pullback. Okay, so if that pullbacks come, all right, so you look in price to stay within these moving averages. Okay, so hold these moving averages and stop just behind the entry. All right, and look in first this trade. All right, and target gonna be that. All right, or where the, if I'm gonna use my fib lines from there to there, that's gonna tell me the next possible target somewhere close to 41 or 161, somewhere there. All right, so this is what you are looking for, that trade. Okay, if that pullbacks come there, okay, then okay, if that pullbacks come, okay, if it doesn't come, then price has already completed that correction. It can continue to keep dragging more lower. Okay, and you shouldn't chase that potential because price is just about to reach that floor. You shouldn't chase that, then let it go. Okay, so this pullback can create this nice potential, okay, which can drag up to that previous low. Okay, we have already seen that wave on New Zealand dollar. Okay, so pull back there on this chart. All right, so why we are having a lot of room on the Australian dollar and CAD? The reason I have already told you guys, New Zealand dollar is a small economy as we compared to the Australian economy, major currency, falling first, telling us that what is going to come on the other major currencies, other major risk on currencies. That's causing that room to happen. Okay, it's a good sign. So it's a good sign that what is market going to do next. Okay, so same goes with this chart. We were expecting this to rise. Okay, in the previous I think I have posted that chart earlier. Let me bring that chart. I have posted that chart on the trading Telegram. Okay, so we're expecting, this is also a similar trade. Okay, nothing new on this chart. Okay, the trade which I have just shown you on Euro New Zealand dollar chart. Okay, so Euro New Zealand dollar chart is about to tag this date. Okay, if we're going to look at that date, Euro New Zealand dollar is about to tag that trade. Okay, but Euro Australian dollar is still somewhere there. Okay, so we still got a room to run. Okay, we were expecting this to hold, all right, and we were expecting it to rise from that previous floor, and it's just rising, and we still got a room. Okay, we still got a room on Euro Australian dollar chart. Okay, so it dragged. Okay, that correction happened, held that previous low or moving averages, slightly went lower. Okay, we are having a significant divergence over there, so momentum is shifting away for upside. All right, so this shock is created by oil. Okay, now the move which we are expecting over there is because of the risk of recession is just rising significantly. That can continue to keep rising. I mean, euro can continue to keep rising, or maybe policy tightening from the ECB can push this pair to continue to keep pushing more higher. So the correction has happened over there. Okay, so the correction has happened over there. It's just pushing higher. Again, similar analysis like the Australian dollar and CAD and Kiwi CAD. We still got a room. Okay, we still got a room to run on this chart to all the way up to that top. So what to expect? Again, similar analysis. The trade has already gone from this previous low. Okay, the entry has already gone from this previous low. We were expecting it to pull back. So this has already gone. So you shouldn't chase it at that top. Okay, so you should wait for the price to pull back. Okay, as said, there you see. So do not chase the breakout. All right, so do not chase the breakout. Breakout has happened. So wait for the bottom. So bottom is not there. No, slightly changed. All right, so formation may change slightly. Okay, so now still you are waiting for this to pull back up to this low. Okay, so bottom there, waiting for this to pull back. And price to just continue to keep rising. You know, do not chase that. Okay, do not chase that. All right, so wait for this to drag more lower, and then you are looking for this to continue to keep rising. All right, and all the way back to that top. And if you are going to chase it, all right, from the current price, there is a risk for the price to fall back. All right, to fall back, you know, back within the correction. Okay, this potential is there, so I wouldn't suggest you to go after that. This is not a, you know, reasonable trade. Okay, so euro New Zealand dollar has almost gone above that top. Okay, there we can see above this top, currency running above that top, and euro Australian dollar is still below that top. All right, so means that we can go above that top. All right, above that top, the top euro New Zealand dollar has already broken above that top, and if euro New Zealand dollar keep pushing all the way back to this top, all right, then euro has got the potential to continue to keep rising for more upside. Okay, so New Zealand dollar is just leading us that move. Okay, so this is what you're expecting. Fall back within the moving averages, hold that previous low, divergence to stay there, momentum to stay there, and euro to just keep rising. All right, so trade is already gone. Either you should have to wait, or let's just look at this chart. Okay, so euro New Zealand dollar is just pushing higher, and you know, I wouldn't suggest you to do anything on this chart. This is just about to, you know, about to tag the target. All right, the target, which is just there, and there is a potential that the price still can continue to keep surging for more upside. Okay, but what you should, you know, price to just keep rising. So the target is about to reach over there, right? And in best case scenario, to go there. Okay, in best case scenario to visit 174. Okay, but you shouldn't chase the price right now. Okay, let the price pull back again, back within the moving averages. Moving averages come over there, hold the trend. Okay, and then continue. Otherwise, do not chase. Do not counter that. Okay, do not sell it. It's not at a spot where you can sell it. All right, ECB is looking to raise the interest rate. So where you should pay attention, there you should pay attention. It has just broke out, you know. There is the trade. Okay, so earlier morning, you know, I was have shared that chart with my members that look for this to break out, because this was the chart to catch. This was the trade to catch. So it has just broken out. Okay, so there where we were expecting, I was expecting this to break out last week, all right, during the Bank of England rate decision. So let me bring that, so that chart, if I'll get that. So 2nd May, let's just get that. If I get that chart, then, because there is the opportunity was there. So okay, so we were expecting these charts to rise, you know, way below, right? So this is the Euro Australian dollar chart, okay, rising from these previous low. So that wave is just on its way right now. Okay, so same goes with the pound Australian dollar. Okay, pound Australian dollar is also, you know, rising, but it went lower on Bank of England rate decision, tested the low and then went higher. All right, so this is the chart. Okay, so do not chase the breakout. Okay, wait for the bottom. It went up to that low And then we had a Bank of England rate decision, and because during that Bank of England rate decision, it crashed. Okay, we were not buying it during that. We were expecting it to bounce off, pound to bounce off during the Bank of England rate decision, but it bounced off after that. Okay, and opened with gap yesterday night and just significantly rising. Okay, so again, trade is same. There is nothing new on this chart. The target is like the Euro New Zealand dollar. Okay, Euro New Zealand dollar target is this. Euro New Zealand dollar is just about to tag that high. After that, Euro Oz is about to tag that top. Okay, so pound New Zealand dollar is about to tag that top. Okay, the chart which is just behind is the pound Australian dollar. Okay, pound Australian dollar still can continue to keep rising all the way back to that top. So earlier, you know, so yeah, so pound Australian dollar broke the floor. Okay, but pound New Zealand dollar didn't broke the floor during the Bank of England rate decision. It went, it held, and just going higher. Okay, the target is same. So this is going really nice. This is going really well. The pound New Zealand dollar chart. Okay, but pound Australian, yeah, so this is going really well. So pound Australian dollar is still behind. Okay, so still behind. So the place you are targeting is this. Okay, this, or in best case scenario, all the way 100% retracement of this oil shock. 100%. All right, so earlier morning we were expecting it to, you know, hold that gap. All right, so there you got the chart. And this 15-minute time frame, we were expecting this to hold that gap. There was the gap. All right, and price to break out that 15-minute correction and continue and entry somewhere there, but it didn't came. All right, it didn't test that and just broke out. So not a surprise. Okay, so it didn't test that gap, not a surprise. But what we know that there is still a lot of potential on this pair to run. Okay, so all the way back to those highs. So what you are looking for right now, so in case if price is still going to visit this area, that gap, it's going to be a buy opportunity. All right, so this gap, price shouldn't close that gap before hitting that price. Okay, so it shouldn't close below. It can test, all right, it can test a couple of times, can stay there, and then can continue to keep rising. So that you can use that gap as a barrier for the price to stay above for reversal. All right, so on 15-minute time frame, price already broke out. All right, already broke out. We know that. If I'm going to pull out Euro New Zealand dollar chart, okay, we are very well above this high or that high. All right, so this is telling us that we still got a room to run. Okay, so Euro New Zealand dollar can push more higher, so pound Australian dollar still can run for more upside. Okay, or at least back to that top. All right, back to this top. Still same price almost. So let's just look at the 15-minute time frame. Okay, so you're waiting for another pullback, for another 15-minute time frame pullback to come over there, and similar kind of pullback, moving averages to hold, and next breakout to happen and continue to keep pushing more higher. So price to stay above that 15-minute trend. All right, so price to stay above that 15-minute trend and continue to keep pushing more higher. So that's your pound Australian dollar chart. Pound New Zealand dollar chart is almost testing the previous top. Okay, opportunity is very much similar like that. Okay, so there is a gap and the price is just going higher. So the target on these charts is very much similar like the Euro New Zealand dollar. Okay, so this is the target, you are watching that target, and you know, a similar 15-minute time frame to continue, or in worst case scenario retest that low. Okay, and continue to keep rising like that. Okay, similar analysis like the Euro New Zealand dollar chart. Okay, so do not buy the top. Similar way, do not buy the top here. Okay, so do not buy that top. So do not look for buy at that top because price is reaching from that top and we may see another leg lower. All right, and if still wanna chase, don't wanna miss that. Okay, then looking for similar kind of 15-minute correction which I have, shown you on the pound Australian dollar. Okay, another pullback and then continue to keep rising. All right, so CAD yen is also similar like the other, yen pairs. Kiwi yen, we can say that, okay, a strong breakout needed over there for this to visit that 78%. Okay, so strong breakout is needed over there. All right, so pound yen, flat formation. All right, like flat formation and continue to keep dragging more lower. NOK, okay, so expanding triangle, stay below the moving averages. All right, and continue to keep. So the trade I'm showing on the yen pairs is similar like the Euro New Zealand dollar. Okay, if Euro New Zealand dollar keeps rising, these currencies will also keep following that. All right, that's the target. All right, so Euro New Zealand dollar is your leading chart. Okay, so you're watching Euro New Zealand. As long as Euro New Zealand dollar is just keep rising, so these charts will definitely gonna follow that. Okay, so there you see. So this is about to retrace up to 60 to 70% of this previous oil shock. Going to remove that. All right, so this move. So this is also going to keep climbing slowly for upside. So the way price remained above 4-hour moving averages there, okay, holding that trend and going higher. Again, going higher, similar way, price to stay above those moving averages and continue to keep rising. So hope that makes sense. The other charts are also, other yen pair charts are also similar. As long as your New Zealand dollar is removing the oil shock, other charts will also, other yen pair charts will also remove the oil shock. Okay, what's the target? This is the target. Okay, this is sheaf yen. Inverted chart, stay above the moving averages, keep climbing. Remove the oil shock. All right, same. Stay below the moving averages. Another possible one more up move back to that top. Okay, find the flat formation. Okay, and then drag lower up to this area. All right, and the same goes with this chart. Okay, so same this chart, all these charts are same like Euro New Zealand dollar. So remove those oil shocks. Okay, so this is also same. Rand. Okay, so Rand can tell you, Rand can lead you that what is going to come on the yen pairs. Okay, so if Rand breaks down this low, this previous low, this is emerging market currency. All right, so if this falls significantly, this previous low, okay, and test that previous low, so we may see other yen pairs also gonna follow that. All right, again, if I'm gonna invert that, we got a oil shock, guys. This is removing the oil shock. All right, okay, there. So it's removing and pushing more higher. So just going to remove that oil shock. Okay, so what you are looking, price to just simply stay within these ranges. Okay, so if it pulls, if it goes back, okay, fall, goes back, okay, hold that top and keep dragging more lower. That's the structure, flat formation you are, looking for, like I have shown on pound yen. All right, so this is also drop. Okay, this is also a easy stuff, easy chart, and a trade setup is clearly being shown on this chart. Okay, because we need weaknesses on the Australian dollar. Okay, just look at that. What we are having a significant divergence. All right, these two charts are diverting. Okay, so hopefully you see that what I see. If doesn't see, if you guys do not see, then let's look at this in a different way. Okay, so Australian dollar should fall aggressively lower. So hopefully here you see. So Australian dollar against the dollar is testing that low. Okay, but this chart still got a room to run. Okay, so there is the trade. Okay, the trade has happened already over there on the Australian dollar. Okay, so you're looking, simply trying to get into the trade somewhere there close to that top. All right, stop behind that and look in this run all the way back to that previous low. Okay, so if I'm gonna look at the formations are also same. All right, we got a, you know, same patterns. All right, ABC move, all right. So we got a ABC move there. Let's just pull some numbers. Maybe you guys understand those numbers. All right, so ABC move was there. ABC move is there. All right, so ABC move is there. ABC move is there. And we can say that, let's just say that A, B, and C wave is just happening over there. Okay, so A, B, and C wave has to happen over there. Okay, so still got a room to run over there on the Uzi Chief. Hope that makes sense. Okay, so there is a potential on the Uzi Chief. Why Uzi is not falling against the Chief? Because right now Chief is losing its strength. All right, Chief is getting weaker. That's the reason Uzi is still holding in. Dollar Chief, you guys have seen where the Dollar Chief is. Okay, so trying to go above $1 mark. All right, so CAD Chief is still pushing more higher. All right, so once we're gonna see that the strength on the Chief, okay, then these charts which are behind, these charts are lagging. Okay, risk on currency. Australian dollar is a risk on currency. Dollar is a safe haven. Australian dollar is a risk on currency. Chief is a safe haven. So dollar is gaining because of the safe haven status, but Chief is not gaining right now because of the safe haven status. Okay, so stock market is falling right now. All right, so creating opportunity, clearly creating opportunity. So same opportunity gonna be over there on the Kiwi Chief. Kiwi Chief gonna have the similar potential. So let's just okay, if I'm gonna pull out New Zealand dollar, US dollar chart on it, and then you guys are gonna start seeing the opportunity. Just look at that. There is the potential opportunity. See there? Strong correlation. All right, strong correlation between the both charts. All right, everything is very much similar. All right, policy divergence came between some, some divergence came between some central banks that has created this divergence. Okay, New Zealand dollar significantly went lower against the dollar. Okay, but New Zealand dollar hasn't dropped against the franc, still holding that top. Okay, means potential opportunities there. All right, or if I'm gonna look at this in a different way, let's just pull out Euro New Zealand dollar chart, invert, all right, so very much similar like that. Okay, very much similar like the Euro New Zealand dollar. All right, so same, Euro New Zealand dollar was bullish, right? And What was the target on the, this is the, that gap is the target, okay, on the Kiwi Chief, okay, that gap within these areas. So if I'm gonna pull out my moving averages, all right, and I'm gonna find some patterns over there, or expanding triangle, so stay below these moving averages, okay. So similar analysis like the Euro New Zealand dollar below, okay. So it can drop, flat formation like the Euro New Zealand dollar, test that top and continue to keep dragging lower. This is the target. Or in best case scenario, the daily drop which we have seen on the New Zealand dollar, US dollar, okay, that drop has gone below this previous low, okay, and it has the potential to drag lower than this previous low. So opportunities there, but these two pairs, Aussie Chief and Kiwi Chief, these two pairs move slower as with compared to the Euro Australian dollar and Euro New Zealand dollar. All right, they move quicker, faster, and more pips going to be over there on those two pairs. So trades are same, risk of moves, risk of trades I'm showing. All right, so Aussie Chief, wheat, so commodities must fall, guys, they must fall. So index I have shown, and oil must fall. All right, so Bitcoin, as said in the previous weekly market outlook, guys, there is a risk for Bitcoin to form that expanding ABC move and fall back to that low. So let's just look at the chart. All right, so let me bring a chart, and then I will tell you, those who are specifically buying the Bitcoin, what you should consider before you start buying the Bitcoin. All right, so let's just look at these two charts. Okay, at the start of this weekly market outlook, I have made fundamental analysis and told you that, shown you inflation chart, shown you US 10-year yield chart, Fed fund rates. All right, so shown you those charts. So, and I told you that guys, yields are still fully exposed to rise for more upside till inflation crash. All right, so that means yields still can rise, okay, and crypto can fall. All right, so the higher the yield goes means less liquidity into the market, okay. So less liquidity into the market means assets which are in a bubble shape, they're gonna be vulnerable. All right, liquidity may shrink there on those risk on assets. They can crash quickly, they can fall sharply to the downside. So keep that thing in mind. All right, so if I'm going to look at this chart, so we have seen yield bottom back in 9 November 2018. All right, and then yield started to crash. Okay, so and then Bitcoin find its floor, its bottom over there, went higher, another correction, yield went higher, and then Bitcoin found its floor, went aggressively higher, exploded. Okay, then what happened? All right, so yields started to rise, liquidity started to fade, all right, and people started to liquidate their Bitcoins, and Bitcoin started to fall. All right, so if yields keeps pushing more higher, okay, let me bring the other chart now. This chart, okay, there you may see clearly, okay, and if I'm gonna look at this chart, so once yield found its bottom over there back in 2018, all right, and started to fall, yield started to fall, not this chart, all right, this chart, yes, all right, so this chart, so yield found its top over there at 325 and started to fall. Okay, then BTC found its bottom for the next run. All right, why that has happened? Why money was coming into the BTC when yield was forming because money was cheap. All right. Ultra loose monetary policy from central banks. They were creating money. They were putting a lot of money into the market. They were trying to create inflation, cheap money. All right. And that money which they created came into these assets. All right. That money came into the BTC and many other risk on assets, and they exploded. All right. And once, yield found its floor over there, all right, and started to rise, went higher, Bitcoin started to struggle to continue its trend for more upside. Okay. Now, higher yield is telling us that people are taking, liquidity is drying. Okay. Liquidity is drying. These assets are not trending for more upside. Bitcoin is struggling to continue to keep its trend for more upside. Okay. So up to which level it can fall? Okay. So that's the time when BTC found its floor over there for more upside. Okay. When yield, started to fall and Bitcoin started to rise. So what is the risk? Up to which level Bitcoin can fall? Okay. Bitcoin, exposed up to 20K. 20K is a reasonable price, which I'm even not those who are longer term holder, 20K is not a reasonable for them. Okay. But the higher the yield goes, okay, the higher the yield goes, okay, the higher the risk gonna be over there for the BTC to crash for more downside. All right. We need to see top on yields as soon as possible for the crypto to start rising again. All right. Till Fed keeps raising the interest rate, are going for the tightening monetary policy. All right. So crypto market gonna struggle. I was saying since very long. Okay. And just repeating those words again. All right. So as long as tightening cycle is there, these risk on assets or cryptocurrencies gonna struggle. They're not gonna rise the way they have risen. Okay. We need to see drop on yields. All right. Yields need to drop before you start looking for these inflationary assets to continue or crypto to continue to keep rising. So there is a risk. Okay. So Bitcoin is lagging significantly between the yields. Okay. So it can break down that 30K, can go up to 20K. There is a significant risk. Those who are, holding the Bitcoin for longer term for more upside. Okay. So keep that thing in mind that it's fully exposed for break below 30K and can go up to 20K. All right. As yield is clearly suggesting that. Okay. So when is the next cycle? When we may see that, crypto can find its floor and can start rising for longer term for the next run. Okay. Again, guys, it's very much simple. I'm saying again, we need to see significant drop on the inflation. Okay. So inflation needs to drop. Okay. The only thing which can stop central banks to raise the interest rate is the inflation. Okay. If inflation dropped significantly, all right, what central bank is doing right now, they are tightening financial conditions. They are trying to take free money away from the market, which is, tightening financial conditions and drying up the liquidity. Because of that, people are not putting their money in these assets. Okay. That's the reason they are not rising. All right. So central banks have to stop this action. They have to stop, tightening financial, conditions. They have to stop. They have to go back to the, ultra loose monetary policy cycle. All right. They have to print more money for these assets to continue to keep rising. All right. So ultra loose monetary policy cycle is not there anymore, which was causing these assets to continue to keep rising. That's not there. So we are having tightening cycle. They are tightening the conditions. Okay. So till they are tightening the financial conditions, you shouldn't expect these assets to explode for more upside. Tightening conditions are deflationary. All right. So inflation caused these assets to rise. 10% inflation or 7%, or so some countries are having 7, some 10, some 6, some 4. All right. That's caused these assets to rise. Okay. That cycle has to reverse for these assets to rise. Okay, till that cycle is not going to reverse, buying Bitcoin and hoping for this to continue to keep rising is not making sense. You can buy for short term, bounce off for a couple of thousand, dollar, and then again it can fall. All right, so keep that thing in mind. We are in a deflationary, central banks are trying to bring down the inflation. All right, that's not a good sign for these assets. Okay, so we are still within that drop, and that drop is just keep happening, and we may see break below that 30k. Yes, we may see some price action for short term. Okay, and you can look for price to hold some buying momentum over there. All right, so some volume to come out over there aggressively, and if that comes out, then you can expect it to go back up. Okay, there we can see people are not buying. They know, they are smart. You see there, the volume is drying up over there. This is the smart money. There you see that the volume was just exploding over there. Okay, and that was the time when central banks were trying to create inflation, no deflationary cycle. Okay, when a lot of volume gonna be over there, okay, then you can see next spike for upside. For short term, it's okay. You can look for these kind of trades over there from 30k. All right, and when you are looking for 30k buying opportunity, make sure you understand that it's fully exposed to break below 30k and even can go up to 20k as long as these yields are pushing more higher. Okay, these yields must need to find top over there. Okay, once yields gonna find top over there, people gonna start putting their money into the bond market. When bond gonna start rising, okay, you're gonna see significant strength on yen as well. Right, yen also gonna start getting stronger as well. All right, so let's move on. BTC, Ethereum is also same. I don't think so I need to talk about that. Similar analysis. Ethereum is also fully exposed to the yield. Okay, but there might be a short-term buy opportunity at these areas, similar like the Bitcoin, back within these areas. I still see that this trend can continue to keep dragging more lower. BNB is also same. Okay, so still can continue to keep dragging more lower all the way back to this previous low. All right, so 2-year yields needs to drop as said. Okay, so indices, yes, there is no reason, okay, for the indices to climb up. Okay, as said, guys, this is just a basic stuff. When interest rates are going higher, stocks gonna be vulnerable to buy. All right, so I'm still anticipating Nikkei index to just keep falling. All right, Nikkei index to just keep falling and tag that previous low, or possibly break that previous low like US indices are doing right now. Okay, so we are having that correction in case if price is going to pull back. Yeah, this area pull back to this previous top on this daily time frame. Okay, then continue. Otherwise, there is no sell opportunity right now and no buy opportunity at all. All right, so S&P 500 is breaking, and in the previous weekly market outlook, if you guys do remember that, we were expecting this triangle to break down, okay, and continue to keep dragging lower. So we are having that trade wave right now. Okay, so what I'm anticipating, I'm not anticipating anything right now on this chart for buy. Okay, I'm anticipating this to just keep dragging slowly lower for the, this is going to be a worst drop, we can see it there. Okay, up to 35. But yes, bounce off can happen, guys. Okay, if anything positive comes from the central bank side, which is not there yet, then we may see bounce off. Okay, this is kind of a neutral analysis. Okay, I see another leg higher that can happen. It can break out from current price and can keep dragging more lower, okay, as yields are still rising, and Fed is looking to raise the interest rate for another 50 basis point. So what's going to be important to watch from now to next Fed meeting is the rhetoric, all right? How Fed is going to communicate with the market. That's going to be very, very important. Okay, that is going to tell us that either the equities are going to bounce up from the current price for upside or not. Okay, so what happened last time in March? Okay, in March, Fed raised the interest rate with 25 basis point. Okay, but they were not hawkish. Okay, they raised the rates, but they were not hawkish the way market was expecting. Okay, but what happened after that? Okay, after March meeting, Fed officials were coming and saying that, they're gonna be super hawkish and gonna be do this, do that, and gonna be raise the interest rate. Anything. They were saying that everything is on the table. They can raise the interest rate with 75 basis point. Okay, but when May meeting came, Fed again Fed raised the interest rate but turned dovish. They raised the interest rate, turned dovish. Okay, they raised 50 basis point, but they didn't talk about much about the balance sheet. All right. So what is important to watch from May to June is the rhetoric, how they are going to communicate with the market for this month. If they are going to repeat the March rhetoric, all right, and going to say that Powell said that 75 basis point is not on the table. If they are going to change that view and going to say that 75 basis point is on the table and they may raise the interest rate with 75 basis point, this is going to be super bearish for the stock market. Okay, then the S&P 500 is not going to bounce up from the current price and gonna rise aggressive, gonna drop for the downside. Okay, and that's what market is expecting. Market is pricing in for 75 basis point for next meeting. All right, market is pricing in for 75 basis point hike for June meeting. Okay, so what I'm expecting, I'm expecting that they're gonna come out, they're gonna repeat the same rhetoric. They're gonna say that everything is on the table, because rhetoric is more important than the actual action. All right, rhetoric is more important than the actual action, because market priced in significantly what they say rather than what they do. All right, so their rhetoric gonna be important for this month. If they are going to repeat the March rhetoric, this is gonna be super bearish for the stock market, and gonna see bounce up on the S&P 500. It's gonna keep dragging more to the downside. Yes, narrative. Okay, and I don't see any reason for Fed to change their narrative, all right, and to turn their narrative to dovish for the whole month. Inflation is sitting at the close to 10%. Why are they gonna do that? Why are they gonna be dovish? Okay, their narrative definitely gonna be super hawkish, but when it's going to come to the actual meeting, they're gonna turn dovish. They're not gonna do what they were saying exactly in the March, right? So keep that thing in mind. Their rhetoric gonna be very important. Their narrative gonna be important. They definitely gonna come out, gonna say that inflation is high and 75 basis point is on the table, and that's gonna be super dovish for the stocks, and stock gonna keep dragging more lower. Okay, and there is significant chance that S&P 500 can drag all the way up to 35 basis point. If we're gonna look at the individual stocks, all right, individual stocks which were giving support to these major indexes for more upside after the 2020 crash, many of them are sitting at this low. All right, many of them is, if we're going to look at the Facebook, all right, Facebook is sitting at, let's bring the Facebook chart. So all those big names are pricing in for the super tightening cycle from the Fed side. So Facebook must be all these majors, all right? So all these majors are struggling. Apple struggling, all right? Look at that. Amazon, Amazon was supporting these big indexes. All right, but Amazon just missed its earning and crashed. All right, so if I'm gonna, that was the ultra loose monetary policy cycle. Okay, look at that, dropped 70% from this previous top. 70% drop has happened over there. So if I'm gonna look at the Nvidia, it's also going. If I'm gonna look at the March, okay, so this is the March 2020 ultra loose monetary policy cycle. So dropped more than 50%. These were the stocks which were holding these major indexes. So if I'm gonna look at this, okay, this is also down 38%. So Facebook, okay, Facebook also went lower. So this is the March. So it went lower almost 86%. Zoom, yeah, removed all its gains, which came over there during the, ultra loose monetary policy cycle. So similar like that Netflix. Okay, so we're gonna look at the Netflix. Look at that. It's just, I was expecting some, price action over there, but it's just crashing more downside. So these are the stocks which were, supporting, in major indices. Now, what is supporting major indices? Why major indices are holding their gains? Because of the energy stock, right? And some bank stocks, energy and bank stocks, they are giving some support to the major indices. So keep these individual charts into your mind when you are looking to invest in the indices for more upside. Okay, they are fully exposed to break down, and there is a risk for them to continue to keep dragging more to the downside. Okay, so Fed rhetoric is going to be more important. So that's the reason the analysis which you see on my chart is a neutral analysis. Okay, it can go both direction, can go both ways. So same goes with the Nasdaq 100 index. I'm anticipating Nasdaq 100 index to just keep falling, keep dragging more downside. All right, and ruble is just dropped. So VIX is still high. VIX is just pushing more high, and DXY, we have just seen that DXY. All right, so short term one more drop is just happening the way I have explained earlier. Okay, one more drop can happen, and from bottom bounce off. So expanding triangle. And if I'm gonna look at the Euro-CAD chart, okay, so Euro-CAD is also a good chart for longer term buy opportunity. All right, so longer term buy opportunity. If I'm gonna pull out my Dollar-CAD chart on this chart, okay, so Dollar-CAD was lagging. Okay, we were expecting, or we can simply say that when let's just bring some old chart, guys. All right, let's bring that old chart so that you can understand that why Euro-CAD is a longer term buy opportunity. Dollar-CAD and 2-week chart must be 2 or 1, must be over there. Day maybe there. All right, so Dollar-CAD went lower, and now we need to look at the Euro-CAD chart. Okay, so Euro-CAD chart should be a weekly chart, this chart. Okay, so it dropped too. Okay, so what happened? Dollar-CAD dropped significantly, keep dropping. Okay, but Euro-CAD went higher because euro was gaining at that time, which gave support to the euro to stay strong against the CAD for a while. And then what happened? Then euro started to fall against the CAD. All right, now what's happening now? Okay, so what's happening now? So if I'm gonna look at the Dollar-CAD chart again, 2-week chart. Okay, Dollar-CAD found its floor over there and reversing. Okay, but Euro-CAD hasn't found its floor yet. Okay, Dollar-CAD found its floor there, but Euro-CAD hasn't found its floor. So where we got the lag, we got the divergence there. Okay, so Dollar-CAD was just keep falling, Euro-CAD went higher, and then Euro-CAD started to fall. Okay, now Dollar-CAD found its floor over there, started to rise, but Euro-CAD is still trying to finish this long cyclical bearish move for upside. Okay, so the way Dollar-CAD has just reversed, Euro-CAD is also setting up for that reversal. Okay, now how to trade? Okay, so before we were, looking for that to reverse within these areas. If you remember, we got some couple of good moves over there. Then we got an oil shock. This is the oil shock, and that oil shock, Euro-CAD remained weaker because of that oil shock. All right, so it remained bearish. Okay, so we were expecting this to break out last week. I think I have shared those charts on Telegram. All right, so there you got. Okay, so Euro-CAD already bounced off, and the next move is just happening over there. Okay, so Euro-CAD went lower. This breakout has happened already. Yeah, and you are just simply looking for buy opportunities every time when you see that the price is testing this previous low or forming new low. Okay, so we do have another chart as an example, and that's the Euro Pound. Okay, so Euro Pound took a lot of time to break out. It broke out, but took a lot of time. All right, so remain there at that floor, and okay, it took a lot of time remain, and then went higher. So similarly, Euro-CAD is just trying to find its floor over there like that. Okay, so short-term buy, and when it actually takes off aggressively for upside, Euro-CAD, like the Dollar-CAD has done, okay, then you are looking it to go for longer term for upside. So Euro-CAD, okay, that's how you are looking it to trade. So yeah, so waiting for price to break above those, moving averages for longer term reversal. Okay, these moving averages will confirm. So we are within these moving averages. We still may see another leg lower like that, back to this previous low. Okay, divergence is just getting stronger and stronger from the floor. Momentum is shifting away, and that momentum going to play out at some point. All right. So pound chief, a kind of neutral chart, won't look at that. Euro pound is very much similar like the Euro CAD. Okay, one more leg can happen. Pound CAD is a longer term buy opportunity. All right, so this kind of opportunity you are simply looking on this chart. Okay, this kind of opportunity, longer term buy opportunity we may see on the pound against the CAD. Okay, same, we are just reaching to these lows. Okay, we need a strong aggressive move over there and pound CAD to reverse those floors. Kiwi chief we have already seen. Okay, Australian dollar should fall from that previous top. Okay, not a best at the moment. All right, because the Kiwi is falling right now. Okay, but once we're gonna see, I have shown significant weaknesses on the Australian dollar chart across the market. Okay, once that gonna come, you're gonna see this is gonna go lower too. So dollar peso is also a buy opportunity for longer term. All right, within these areas, a dollar is significantly up. Okay, but dollar is still struggling against some emerging market currencies. Okay, but as said, the higher the risk gonna be over there for the recession, okay, you're gonna see like that kind of breakout. Or there is the example. I think I don't need to talk about that. Okay, so similar kind of move gonna be over there on these emerging market currencies, like Chinese yuan is just doing right now. So Chinese yuan to just keep pushing more higher. Okay, so short-term continuation, guys. So what you are looking, just simply pullbacks and continue trend to hold. Use your moving averages and price to pull back within those moving averages, price to form a nice correction and continue its trend for more upside. Okay, something like dollar sheaf chart. Okay, pullback needed for more upside and continuation for more upside, like that. All right, so dollar rand is also pushing more higher, more upside is possible. Okay, as the recession risk is just rising, and you shouldn't chase that at the current price. All right, you just shouldn't chase that. If it continue, then continue, or simply not ready at the current price to do anything. All right, so Euro stock still can drag more lower. Okay, where is the US stock is sitting? US stock is sitting over there. Okay, you still got a potential on these charts. Okay, that's the potential on lower time frame. All right, so US 30 to break down to, okay, keep dragging more lower or pull back for another leg higher and then drop like other US indices. So German 30, okay, we still got a room. Where the US indices are sitting, okay, there is the potential. US indices are sitting over there at March 2020 lows. Okay, there is the March 2020 lows. There. Okay, there is the March 2020 lows. This is US 30. All US indices are sitting over there. So European indices will also tag those lows. Okay, so the opportunity going to be over there. So DAX and stock 600. So you know, I was expecting that to happen. Yeah, so I share those charts in my you know, with my group, and that's just, you know, happening right now. So more downside is on card on these US indices, you know, European indices. Okay, US indices are leading us that what is going to come with the European indices. Okay, these are the clear. Even I have, you know, shown you these move to happen in the previous weekly market outlook. All right, so that's happening right now. CAC 40 is also falling. All right, so let me. All right, so CAC 40 is also falling. All these European indices are having same structure, same pattern. So it's falling, just going up to March 2020 lows. So this is going stock 600 going. All right, so CAC 40 is there. So this is also going back to this low. So potential is still there. Okay, 100 index, UK 100 index is not a best at the moment, but EU indices, all right. So Frank 40 and German 30 got room. Stock 600 got the room. Okay, Frank 40 got the room to run back to that low. All right, so gold. Okay, gold, you know, again, gold is an inflationary asset. All right, so when inflation goes higher, you see gold goes higher. Okay, when inflation goes down or rate goes higher, you should expect gold to rise. In the previous weekly market outlook, I have repeated that. Okay, we may not see next run on gold at this area, if you remember. Okay, so since then gold is falling. So I don't see a rise on gold at the moment. Okay, we may see a quick, sharp, aggressive drop on gold like that. Okay, gold hasn't fallen the way we have seen drop on bonds. All right, bonds, safe havens. Okay, yen safe havens. All right, and yen dropped, safe haven dropped, you know, significantly after yield curve control from Bank of Japan. All right, and bonds, you know, just we are having historical drawdown on bonds. All right, we haven't seen that kind of drawdown. Why we are having historical drawdown? It makes sense, guys. When yields are you know, close to zero, what you can expect from bonds, you only can expect, you know, historical drawdown from bonds. All right, so yields are, you know, are rising from 0 to 3%. All right, so you definitely you can expect, you know, historical drawdown. So we haven't seen that kind of drop on gold yet. So there is a risk for the gold to crash. All right, gold can crash very, very aggressively all the way up to 1680. So if you are buying gold, now there is no sense to buy gold till yields are rising. Once yields gonna find their top, all right, then we expect gold to continue to keep, rising. If you look at the stock market right now, and if you look at the gold, both are falling. Even bond is falling. All right. When stock goes down, bonds should go higher because of safe haven status. But right now it's not happening. Stocks falling, bonds falling, safe havens falling. All right. So except dollar is rising. Okay, why is that? Because of financial conditions are tightening. Central banks are taking away liquidity. All right, liquidity is drying up. What was causing these assets to go higher? There was a lot of liquidity. Yeah, these assets were rising because of a lot of liquidity. Now liquidity is drying up. All right, liquidity is drying up. That's why all assets are under pressure except dollar. All right, so we may see a crash on gold. Okay, gold can crash up to 1650 or 1680, and then we may see a buy opportunity over there on gold, like that. Okay, like this previous one. So short term still bearish on the gold. A quick breakout is expected, and then we may see a buy opportunity. Not a best chart for me right now. Okay, so same goes with the silver. Okay, so same terminology applied over there on the silver. Okay, so silver can drag more lower before a sideways move within that area. Okay, not a best buy silver. Okay, no metal right now is not a best buy. No metal. Okay, whatever the metal is, if it is the copper, not a best buy. Yeah, so look at that. All gonna be under pressure because of the higher rates. Okay, gold, silver. All right, copper, I'm anticipating copper to draw for a big time. All right, copper to draw for a big time from that top. We were expecting already. All right, so copper is finding that top. Okay, so big time, copper to big time drop over there. All right, so platinum struggling, palladium also struggling. All these, look at that. Aluminium struggling. All right, so nickel, historical rise we have seen on nickel. Then again, so all these commodities needs to fall, then inflation gonna come down. All right, inflation not gonna come down without these assets to stay high. All right, so same analysis, guys, on these metals. These metals needs to fall, then we're gonna have inflation to fall. All right, so US small caps gonna stay under pressure. Okay, they can continue to keep dragging more lower. If you remember that last time when we were looking for US Russell 2000, we were expecting US Russell 2000 to hold that triangle and continue to keep dragging more lower. So US small caps are still under pressure and can go more lower. Okay, so I don't see potential opportunity right now on them. Do not buy them. There is no reason for buy them. Okay, we are heading towards the recession. Tightening cycle is there. You should expect them to continue to keep pushing more higher. Okay, so this is the structure. Yeah, another correction can happen or price can keep dragging more lower till Fed stop. Okay, they're gonna stay under pressure. Till Fed stop, they're gonna stay under pressure. All right, and crypto, again, crypto gonna stay under pressure, guys. There is no logic right now to buy coins. Okay, all coins are red, and they can continue to keep dragging more lower. Okay, once Fed gonna stop, that's gonna be the timing to load up to these coins. Okay, they are falling, they can keep falling, and you should expect them to continue to keep dropping more lower. All right, so Terra is also dropped from that previous top. Okay, all these coins needs to continue to keep dragging more lower. Right, do not buy, do not run after these coins for any coin, whatever the coin. A coin pop up in daily tradings. Okay, so you can trade on that for short term, but the run you are looking, next run on the crypto market is not going to come anytime soon. All right, so all these coins are under pressure. Okay, so hope that makes sense. So individual stocks are also under pressure. Yeah, so everything is under pressure. Everything is under pressure. So only yields are rising, people are selling bonds, okay, and buying dollar. That's it. So let's just finish here, guys. Is there any question? Let me know. We're gonna end here, okay, and have a great trading week. All right, market is, is setting up for a major reversal. We are going to see a major reversal. Okay, what is the major reversal? The major reversal is the commodities to drop. Okay, that's gonna bring a major reversal. So if commodities are going to drop very much similar like 2008, this is gonna be a huge, okay, commodities need to drop. So when commodities gonna drop, right, and commodities gonna drop, guys, definitely commodities are going to drop. There is no question about that, okay, because this world cannot go on higher commodities prices. This world cannot move. People cannot afford, all right, simply their lives are being affected because of the higher inflations, okay, they cannot afford. So economic activities are already slowing down, all right, and slow down in economic activities going to bring down these assets. When no one gonna buy commodities at such higher levels, then how price is gonna keep pushing more higher. Okay, so demand is slowing down. All right, so central banks are trying to slow down the demand. Okay, so we haven't seen that slow down significantly on commodities yet. Okay, when we're gonna have first crash, okay, sharp sell-off, that's gonna be a first sign that yes, demand is slowing down. Tightening cycle is financial conditions are going to play out, and the commodity cycle is over now. We are going to see a big cyclical drop on the commodities. Okay, so how long that cyclical drop can last, that's the question. Okay, so if I'm going to look at this previous one from 2011 to 2020, so it remained almost 10 years, guys. So 10 years prices keep dropping on commodities. Okay, and if we are not going to see that kind of drop, and we are going to see a quick aggressive sharp drop like we have seen in 2008, that that drop remained over there 217 days. Yeah, so what central banks are saying that inflation gonna come down slowly. All right, so inflation is not going to drop very, very aggressively. So inflation gonna come down slowly. They are predicting like that. They are actually trying to prolong the growth cycle, okay, by raising the interest rate slowly rather than aggressively. When they know that inflation is 10%, rates are 3%, all right, and still rising, and they are holding Fed fund rates close to 1%, why they are not rising? Why they are not trying to get ahead of the curve? Why they are trying to raise the interest rate slowly? Because they are trying to prolong this growth cycle. Okay, the slower they're gonna raise the interest rate, the longer the growth cycle gonna be. Okay, if they're gonna raise the interest rate within a couple of meetings, gonna get ahead of the curve, okay, all these assets gonna collapse within a week or two, within a month, all right, like the way they have done over there. So they are not risking that. They are trying to prolong the cycle. So they are raising the interest rate slowly so that they can prolong that growth cycle. That's the logic behind that, because of being slow behind the trying to be, central banks are slow, all right, raising the interest rate slowly. So they want to prolong this growth cycle. That's the reason. Okay, guys, so thank you very much. We'll see you back again in another weekly market outlook, hopefully next week on Sunday, 5 p.m. Until then, bye-bye, and have a great trading week. Thank you. Bye, guys.